Welcome back, and it's so good to be back on Trade Live with IG. I bet you guys thought that Richard bundled me off and gagged me and threw me into the river somewhere, but he didn't. He has been an absolute star.
Well, I did, but she escaped. Welcome back, Ange. It's wonderful to have you back in the seat.
So good to be back.
So, and we went matchy-matchy without even realising it.
I know. This is how much I miss Rich after a week of being in different hospitals. Not for me, but for my in-laws who are not well. And Rich and Fred, Phil, Terence and Cam and the guys have been an absolute star. All going, yay. Covering for me, as well as the PCMs, of course, and everyone across IG. Such support, incredible stuff. And we're back, and loads of stuff to get you through, loads of trade ideas that we're going to be talking you through. Rich, get us started.
On what is coming up? Well, we have a good extended confirm and send today because we've got so many questions to get through. We're going to run you through part technical analysis and part option analysis. But if there's any additional questions you would like to throw at us, then please log into your comment section on the YouTube and drop some questions in there, because we have got some time to answer some additional questions. And then later in the show, we've got a market measures that I think, you're going to find interesting in this one.
What's also fabulous is we're going to have the one and only Axel Rudolph here with us on live on the IG trade floor. But also we have...
and a bearish Axel Rudolph, Ange.
Oh, I know.
He's gone bearish.
I know. That's... I don't know which one I like more, the bullish Axel Rudolph or the bearish Axel Rudolph. He does do bearish well, I have to say. He's German.
Yes, I know all about that.
I can say that because Rich is the German.
My better half is German as well, but she's very happy because she won her company fantasy football. They had a special weekend in that whoever got the most points this weekend won £30. So we spent £26 on Now TV yesterday because she wanted to watch the football. But out of 62 people, there's only 3 women in her firm that play fantasy football, and she's won the whole week.
Amazing.
So yeah, there's going to be plaudits there. But yeah, she was lucky because that Arsenal, the equaliser against Arsenal yesterday meant that she won. Our producer Fred likes that one. He was at the game.
Oh, well, don't say we got lots and lots of Arsenal fans amongst our IG clients. I think about.
But also we have West Ham fans. we turned over Man United.
And Tottenham Hotspur. What else are you going to? So you spent it on Now TV.
£26 a month on Now TV for the next 6 months we're stuck with because we wanted to watch. But to be honest, you get a whole load. We got Mexican Grand Prix was on last night. You had NFL, as well as both of the big games yesterday afternoon. So yeah, I think it's a good purchase.
Good.
So I'm short Netflix, long Now TV.
Well, you got out of Netflix in more ways than one recently, and just decided enough was enough, right? I checked. I'm still on the promotional $12.99, I think.
How?
Because I joined late, mate.
But it's like a 12-month offer or something.
Yeah, because it was an offer. If you cancel whoever you're with and come to them, they'll give me. I'm sure this time next year I'm going to be like, I've just been burnt by this Netflix.
Yeah, $18.99, which it will be by then. Now. Yeah, we've got also, what's next? That's going to be our big section today. So join us about 9:40 this morning. We're going to go through everything to expect in the next week. It's a bumper earnings week.
Monster
earnings week.
I love weeks like this because you have so much to trade and you've got clear timings, right? And also the thing is, it's the Meg 5. We've got Meta, Microsoft. I'm getting husky just talking about this. It's not just the earnings that are going to be key, but of course the real countdown to the US election starts now. And well, it started a long time ago, but even more so now, because I was shocked, Rich, to find out, right? As I was checking last week, I was trying to work on the laptop at the same time. But margins are still slim between Kamala and Trump.
Is the betting market has had one large whale come in and has skewed the whole betting market towards Trump. But the polls are still fairly even.
It sounds a bit to me like everyone who wants to vote for Kamala has stayed voting Kamala. All those wanting to vote Trump have stayed Trump voters. And now, as we gear up to November 5th, they have to get these people out, right? They just have to get them out, which is really bizarre because you would expect some sort of switching of sides by now. Every time I speak to my cousins over there, there's been no change.
Right. Interesting. And Fred actually pointed out to me this morning that a high number of Americans have voted already.
Yeah.
They do it by postal vote.
That's right. And also this year, I'm not sure how legal this is, but apparently it is over there. I've got aunts and cousins who've signed up to vote early in the United States. So they avoid the crush. There's a real concern of unrest. And so they're able to vote. Some of them voted last weekend.
Wow, okay.
Yeah. It's
fair. So within a month you can do it, I guess. Right?
Unbelievable. Like you couldn't do that here, could you? If it wasn't a postal vote, you couldn't just go and...
You can, but I think you have to actually give a reason why you can't make it along in the day, from memory.
They're all sending me like pictures of, after voting with the US flag and everything.
And the MAGA hats.
MAGA. The ones on the Michigan side are MAGA. All my family on the East Coast are Kamala.
Or they're mixed. That's interesting, right? Right, on the comments, good morning, Julian. Julian says he's looking forward to some thought-provoking content this morning. So, yeah, I'm not sure which channel you're watching. And then Monkey Man's got a question for us. Is Google forming a cup and handle? We will cover that in Confirm and Send. Thank you very much, Monkey Man. So, shall we go to some overnight news? Because we have a big move in oil. Join us, Overnight Action.
Hey, welcome back to Overnight Action. We'll take you across all the action that is going to move markets and assets this coming session.
Oh, you're going to save my voice. Goodness, you're back. I can already feel the number of words. I think the number of words I said per episode last week.
Oh, wow.
Was at least up 80%.
You were amazing. I almost messaged...
And the poor guys in the gallery had to listen to it, yeah.
I always messaged in to ask them, what you fed Wardy and the gang, because they were stellar. They had a...
Well, Wardy wasn't. He was a bit fast asleep. It was a Monday morning, but the rest were on top form.
Wardy, you listening? But I was most impressed by, all the fact that you got Tom in day one. Tom Roberts.
Ah, Tom Roberts, right? Yeah.
Because Tom, if you're listening, I've tried to get you in several times, but clearly Rich has got some magic bullet that managed to get you in.
And he will be back as well. He was on top form, and Tom Wolstenholme backing him up as well.
Amazing.
We had a couple of good quizzes there. So let's go on to the big story over the weekend. Of course, it started Friday night with those attacks from Israel, the fighter jets attacking locations in Iran. However, of course, it wasn't military. It was military. It wasn't oil. It wasn't nuclear. So we've got oil prices down 4.2% this morning. They were lower on they were more than down more than 5%. But we've got a general consensus that this is a de-escalation, because they had options to go for. Of course, they've decided to go for the military. But also the retaliation that you've had verbally from Iran hasn't been we will go and retaliate.
Give us a Christmas special in terms of fireworks.
Yes, so we go back to a state now of oil potentially in oversupply. You know, there was that premium has been taken right out of it, but against the grain, I fancy a short here.
I agree. The technicals agree. So I bearish oil. I've actually written a thesis, which Phil's punched up on screen for us. And I've drawn lines there specifically to show you what I'm looking out for. And really it was that support line at 70. And we break through down past that 70 with conviction. And we have done that recently. Then the next level that I'm looking out for is 67.
Yeah,
and after that, 65. So I think I'm going to put a trade on oil today. If we don't hear any sort of noises or mood music of retaliation, the fact that we haven't seen any refineries or any oil targets specifically actually gives me a good feeling about this thesis of bearish oil. But also, I think a lot of the oil, if you trade WTI, trader friends, a lot of this is also down to China, right? And a lot of the demand comes from China, and it's really weak at the moment, as we know. Which reminds me, I am also waiting on the Chinese to do something this Friday.
What's this Friday?
You got your shirt ready?
Oh. Is there more
your
stimulus?
China Tuesday shirt ready?
It is. It's all washed.
What, from the last time?
Yeah, well, no, you missed one. There was a bearish red as well as Chinese red.
Oh, you need to wear black then. No, there are these murmurings that they're going to try and do one more lot before the elections.
Right.
To kind of say, you know, we're doing our bit, people.
And when are the elections?
November, the US elections.
Ah, okay.
because there's too much noise after that. So
Right.
they're going to try and do something beforehand.
Okay.
And I've heard murmurings that it might be this Friday.
Right.
So we'll see. But if there are any signs there from our Chinese friends that, you know, they're having to do this because things are still really tough on the ground and they're still having difficulty trying to get their economy, you know, back up and running and, you know, chugging along, then, you know, that tells me, that is an indication for me that consumption is going to remain weak for some time then.
Well, and that leads us very well into Philips numbers. So we've had numbers from Philips this morning, and they have lowered their sales forecast because of declining demand in China. So that's pushed its order intake down 2% in the third quarter. Now expects comparable sales to grow 0.5 to 1.5 in 2024. That's down from 3 to 5%. So, you know, a decent cut in its sales growth, but it does expect core profit margin to come in at the upper end of its previous outlook. So let's have a quick look at chart there. It's
got quite a nice chart, I have to say. That's the daily chart for you.
Yeah.
And, you know, it's got a very good look at that. Higher highs, higher lows.
Well, they expected decent numbers then, didn't they?
Yeah. Let's take a look at the weekly chart. So still a good trend there from November 2022 in play. That's the weekly chart, people. Yeah. So from 2022.
Right, so that could be tricky. I wonder if we've had any indications yet of where that's going to open. It might be a little bit early, but let's see if we can get something. Philips, down 9%.
You think 9%, they're saying?
Down 9%, yeah.
Interesting. Yeah.
That is. So yeah, so a big cut in their sales forecast hitting Philips. That's about the only set of numbers we've had this morning. Or did we also had Trainline, is that right?
Yeah, Trainline. And I believe we also had some overnight news from Boeing. Just searching that up for you as well.
Oh, there we go. Trainline raised its full year revenue forecast second time in less than 2 months. Wow. Go on, Trainline. I think I talked Pega out of going long this.
I think you did. She went for EasyJet. No.
Yeah.
Yes.
You're right. Yeah. So that's my bad, Pega. If you're watching while you're on holiday, I'd be worried if you are. Yeah, but Trainline raising their full year forecast. So let's see how that one, if it stays on track this morning.
Plus 500, also one that looking out for plus 500, 11% year-on-year increase in Q3 revenues. Just trying to see if I can... What was the other one we saw this morning? Was it Lloyd's?
Oh, yes. Well remembered.
Lloyd's Banking Group.
Oof, this was not pretty on after a good number, good set of numbers, and generally, you know, a great week for UK banks.
That's painful.
We had
down 7.3.
They've actually come out with a statement as well at 7 a.m. by the looks. So Lloyds notes the recent Court of Appeal decisions on motor commission arrangements. The Court of Appeal has determined that motor dealers acting as credit brokers owe certain duties to disclose their customers' commission payable to them by lenders, here, and that lenders will be liable for dealers' non-disclosures. Now, this also affected Close Brothers, didn't it? Close Brothers got killed. Lloyds was down 4% on Friday. And it feels like...
Here we are, Close Brothers.
It kind of feels like it came out of nowhere. I hadn't heard too much about this.
I think it was a long time coming, and now it's confirmed. There was all this talk about Lloyds being in a similar sort of like mis-sold PPI situation relating to this motor insurance. And look at that, Close Brothers. This is a daily chart. Woo, down 23%.
It's
quite painful, that. And it'll be interesting to see what happens at the Open.
Yeah, that's ones to watch as well. Do we have...
including Friday's losses, Close Brothers down 62% year to date. Lloyds up 25%. Lloyds, of course, one of the key providers of that motor finance.
Now, you mentioned Boeing there.
I'm just thinking about your position. Have you still got position on the FTSE? Because this might have a knock-on effect.
Well, I think most of it's in on Friday, wasn't it? I'm short FTSE at the moment. But that was just on oil, really. So, yeah, I went long 10 p.m. last night when the futures markets opened. I shorted more FTSE because of the oil move. I shorted a little bit of oil and then bought some Germany. But I also shorted gold, and that's actually gone against me so far. If there's de-escalation in the Middle East, right, which so far it looks like there is, because there was the targets that were hit, then oil price goes down, so you've got less chance of inflation. And it's a de-escalation of geopolitical tensions. Those are two negatives for gold. But gold's only down 30 basis points.
Yes, but you're forgetting the support that the November 5th election is giving gold. Because markets are worried about this.
But that's why it's at all-time highs, right? If you just took what's the difference from Friday's price to now, there's two negatives. But, I mean, the market's clearly going with you, right? Because it's only down 30 basis points.
Yeah, I mean, I think gold, there's so many buyers in the market, it's hard for it to go down significantly. And so that's why I've switched over. I told you I was a bit concerned about this too, because I wasn't seeing a clearer picture. So I thought, what can I do with gold if I'm still bullish, but with less volatility? So I looked at the iShares Gold Producers UCITS ETF.
Oh, right. Okay, yeah. Yep.
Buffet.
Yeah.
The buffet style instead of
exactly.
Rich's a la carte. And
fancy some of that Singapore.
Whoa.
Talking about buffets.
So as you can see here, I mean, I'm still down money on this trade, but I have only taken, 50p per point. So I really scaled.
That's the daily.
Yeah, this is the daily chart. And so I this is a real sort of like short-term thesis here that it might rise up to 148, 150 around there.
Shall we have a quick look at the top constituents in there? Performance holdings. Right, top holdings. Agnico Eagle, 9%. Wheaton Precious Metals, 9%. Barrick, Newmont, Franco-Nevada, Goldfields ADR, of course the South African company has an ADR. Northern Star, I do not know many of these.
You know AngloGold Ashanti?
Yeah.
Right? Yeah. So I'm hoping just,
Franco-Nevada. I've never traded that one.
having exposure on the miners perhaps might give me a position still, but not as big or volatile a position. I don't know.
I don't know. It could be more volatile. I'm not. Well, that would be an interesting one for Sahil to look at. Do we get more? You definitely get more leverage in the junior producers, and when I say leverage, more volatility. So I would think it would go the junior gold producers, then this ETF, and then gold itself. I would think. Having said that, when gold's this high, I think there's about a 1.5 beta on the stocks.
But this is a medium term, I would say. It's not like a long term. And I'm also looking at the client sentiment on the IG platform. 88% long, 88% of our clients have long positions, 12% have short positions. This is why I am thinking this might be a trade that is going to be maybe this week, maybe next week. I'll take it off, depending on how we go, because I know it sounds controversial, but sometimes the way I use the client sentiment is it's a contrarian view.
Yeah.
Because so many people have piled in, right? You don't want to be the last person with pass the parcel.
That's very true. And a reminder, 70% of clients lose money on leveraged products. So, which is always worth taking note of.
So I sometimes use that as kind of like my compass to see how long a trade or a thesis should be there for. And speaking of thesis, a proud moment for me.
You haven't gone back to university, have you?
Well, university, what's the saying? Life is the greatest university, isn't it?
Yeah, very much.
What was the other one?
Right.
Yeah, Fred's saying, shut up and let's get to the break.
And we'll be back with opening bell in 3 minutes.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome to IG's Charting the Markets, your gateway to expert technical analysis and market forecasts. Our video series breaks down the complex world of technical analysis into 3 key asset classes: indices, forex, and commodities. Watch as IG's expert analysts dissect charts, spot trends, and provide actionable insights. Whether you're tracking global indices, navigating currency pairs, or exploring commodity markets, we've got you covered. Sharpen your technical analysis skills and make informed decisions. Join us for Charting the Markets every week in IG's trading platform and on IG.com, where data meets clarity. Start watching now and stay ahead of the curve.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
So, Ange, the update on Tom Sosnoff's trip to the UK is London is sold out.
Yay!
The tickets are all gone. So, if you would like to see Tom live on stage trading between 6:30 and 8 o'clock, 9 o'clock, then we've still got tickets for Edinburgh, Manchester, Birmingham, and Dublin. So go on to Eventbrite or just tastylive.com and you can sign up for those for free.
I heard Edinburgh sold out too.
No, I think there's still some tickets for Edinburgh.
Ah, cool.
I'll get you in. I'm going to be in Edinburgh. Come and join me.
In the caves.
In the caves.
Are you brave enough to meet Richie Rich in the caves? What is the caves?
Do we have a bell yet for opening bell? That's the question.
Oh, yes. Well, have a look. They're telling me to look under the chair. Is that Phil? Have you hidden a bell?
There will be. I am buying. I'm ordering
excited.
a bell on Amazon today.
Can we have like a really big NASDAQ bell?
Reminder, everybody, all sessions opens at 8 a.m. in 40 seconds. All sessions opens at 8 a.m. for the next week because of the difference in times. That extra hour in bed this morning. The Americans don't get it yet. So all sessions will be open. We're watching Boeing at that time because, of course, there is noise around this morning that 15 billion capital raise may come as early as today, and it's going to be 15 billion, and there's no settlement to the strike yet. That is going to be one to watch there. We're going to be watching Philips, we're going to be watching Trainline, we're going to be watching Lloyds, and you're going to ring a ding?
I'm going to ring a ding too.
Ding, ding, ding.
Maybe BT, because it could be looking to sell its Radians unit, although it's still an FT article.
Right.
But also looking at crosses, the yen versus the dollar, maybe.
Oh, the airlines are going to the moon.
Oh, is that because of oil?
Yeah, of course, completely missed that. Where is EasyJet? It cannot be open yet. Is it open? No, it can't be open.
Airlines.
It is open.
EasyJet.
Up 3%.
Yeah.
I've just bought some EasyJet.
Good on Pega.
Great for Pega.
Yeah.
Exactly. Right. Let's see what else we've got here then. Trainline up 5.7%. That one on track to meet its numbers. It's the second time I've used that this morning. You're rubbish. You're all rubbish. You missed it the first time.
Lloyds as well, on its way down for a second session. Taking a look at that.
Where's Lloyds looking?
Down 4%.
Down 4. BP only down 2. Lloyds down. No, I've only got Lloyds down 1.
Well, I've got down 4. Maybe we're on different servers.
That's strange, isn't it? Air France up 5.5. Deutsche Lufthansa up 4. Kering, have you still got your Hermes?
No,
Hermes had good numbers last week. We were thinking of you.
Close Brothers, I'm trying to put on a trade there because I've just seen that it might mimic what is happening with Lloyd. And this is the daily chart, people. Close Brothers has just started moving down 6%. Yeah.
Right, so we've got Marks and Spencer's up 1 hour. I haven't seen anything retail-wise for Marks and Spencer's to be up. That's interesting. 383. That's probably breaking out. Let's just check a quick chart on M&S. Onto the daily. And no, not quite. We have been up near to £4, 393. So Marks and Spencer's up 1.5. Haven't seen a story there, but certainly looking decent. On the downside, BP down 2.3%. I do have some of those. That's going to hurt a little bit, but numbers are tomorrow. So, BP and Shell both reporting this week. Lloyd's down another 1.5.
Are you short BP?
No, I'm long BP.
Long BP.
Long BP. Total down as well. So all the European oil names, of course, getting hit on the back of that. Oil down 4% move overnight.
Intercontinental also up 1.3%. Marks and Spencer's, good one for Tom, up more than 1%. But interesting to see that also we're seeing broad spectrum strength amongst the house builders as well. Can you see Persimmon is up? The other house builder, Rightmove is up slightly. That's not a house builder, but I also watch Rightmove in the corner of my eye because I have a trade on that. Barrett up slightly. Taylor Wimpey up just a touch there. So let's take a look at what's happening over in Germany as well.
Yeah, you get Germany, and I'm going to add Philips to my my watch list because I don't think I've got it on there. No trade yet on Philips. That's not a good sign. That means it's in an extended auction, which we would expect the move to be more than down 5%. And of course, we did see an early indication down as much as 9.
Wow.
9.
Germany 40, whilst we're waiting on that, and the gallery guys are laughing at Fritz's 9.
Accent.
Continental.
Tuesday, what I hear from my girlfriend.
On the leaders board here, Continental is up more than 1%. BMW also up. So is Infineon. But we're seeing strength in the pharmaceuticals and the autos in Germany. Taking a look at Air France as well, Trader Fred, or producer Fred, is telling us. Air France, KLM.
No, I think it's just on the Middle East de-escalation and the dropping oil price. I think that's the big move in Air France. The only major upgrade downgrade today I saw from analysts was in Glencore. There was an upgrade in Glencore. HSBC went to buy with a price target of 4.65. So Glencore trading at £4.07. There was good support under that £4 level. It dropped as much as to £3.80. But yeah, we did. And Lufthansa up 4.2. Trainline now up 7. So Trainline really starting to gather steam there. No, they've missed it again. Trainline's starting to gather steam. Jeez, welcome to Monday morning.
How many? That's 2 now. Yeah. Producer Fred and the director's like, if he says another train-related pun, do we just take his mic out?
I was a train spotter back in my 12-year-old, 13-year-old.
Have you done the Bluebell Railway?
Don't think I've done that one.
It's quite cool. It's like the Hogwarts train.
Oh right, okay.
Yeah, but like a real one.
With the steam train?
Yeah.
Ah, nice.
It's one of the most amazing things that you can do. Sticking your head out and putting a hand out and catching steam.
Don't do that, kids. Do not put your head out a train window. Right, let's just go to the major FX and commodity moves. This is my new screen. Everybody will be happy to hear I spent my Sunday afternoon preparing this screen for you.
Hey.
So we've got that oil price move down 4.6. I'm going to go through, in trade expectations, I'm going to go through an oil options trade today because I want exposure to that downside. I think potentially we see an oversupplied market weighing on that price further. So yeah, I'm going to look at some downside in oil and to protect myself on my long BP position, of course.
Oh yeah, ahead of tomorrow.
Currency-wise, now we had a story in the Japanese election.
Yeah,
Let's see if
I was looking at the dollar versus the yen, and that this is the daily chart here. People still up around 0.33%, coming off slightly now after we had that news overnight, which you can find actually after that LDP loss. Up at recent highs after the ruling LDP Komeito election loss. What's interesting though is that there is now this expectation for a push up later to 153.88 on the back of the Nikkei rally and also currency hedges. But what's interesting, of course, is it's now coming off slightly. I don't know whether you trade the yen very much, but it is one of the more volatile crosses if you're looking for one, the yen versus the dollar.
So yeah, first thing producer Fred says this is similar to the situation in France now, because is the position of the Prime Minister untenable? And Ishiba's, who had called that snap poll in the first place, to draw a line under the slush fund scandal, then it's a harsh verdict. So we're going to see political uncertainty more in Japan there. Is that going to weigh on the currency further?
Meanwhile, nothing yet on Philips. We're still getting this
a double extended auction.
Woof.
I think that means longer.
It doesn't normally last this long, does it?
Well, that means it's
suspended.
Potentially down more than 10. I think it's down 5%, goes to 805. If it's down more than 10%, it could go to 810. Right, so we got oil down 4.6 is the big move of the morning. Gold, Ange and I are going head to head. We're butting horns on the gold price. I am now short gold because I think that a falling oil price takes some inflationary pressure out, but also a de-escalation in the Middle East, we all hope. That certainly should take some of the premium out of gold as well for the safe haven.
And I have got a play on the iShares Gold Producers ETF in the hope that in a medium-term trade, potentially we might get, if we get some support in terms of gold. Rich thinks that the US election premium has already been factored in, but I think maybe there's a bit more to go given so much uncertainty out there, and also potentially uncertainty coming out from China.
I think we're just different time frames, aren't we? Yeah. Mine's just a short-term trade for probably 2 days, I would imagine.
Mine's more like a week, 2 weeks. So, but taking a look at Phillips again, speaking of China, because this is linked to China, right? And still nothing. Yeah, Rich, watch your slouching.
I'm so relaxed now that you're back.
So Close Brothers, it's good to be back, guys. And as he was talking, as Rich was talking, I put on a short on Close Brothers because I noticed that the Lloyd's move was not yet mirrored by Close Brothers. I mean, it wasn't actually a big position. I just put a pound a point, and it's now up money. So I'm looking at the daily, but also taking a look at the 1 minute chart to see how that is moving. Yeah. At the moment, it's kind of leveled off, so I am thinking...
Just watch your spread on that, people, though. If you are trading Close Brothers, what's the size of the spread that could catch you out?
But also, it's coming up to where I placed the trade, so I'm just going to close out. And because I don't like the way the minute chart is speaking to me, can you see it slowly starting to move back? Mm-hmm. I've come back out of that. So that's a scalp. That's not a big trade, that's just a scalp. But if it was a stock that I regularly trade, then I would have taken a bigger point sort of trade. That was a very small size.
Now, Trainline extended its gains up 8.8. We got EasyJet up 3.5. So there was some nice easy money on the open on EasyJet there. IAG up 2.6. The mining stocks up around about 1%. Anglo's up 80 basis points. Glencore up 1. We've got what else? In Europe, Air France up 5. Lufthansa up 3. Ryanair up 1.8. And the French autos up 1 and 1.25.
I'll tell you why I'm also looking at, gold still having some sort of upside. And that is purely because I just think the whole Russia-Ukraine thing hasn't quite finished yet. The world might have forgotten that there's a 2.5-year-old war happening there. But I just have this gut feeling that every time things kick off there, it's always cold here. It's always winter, right? And there are now sort of murmurings that, Russia's looking at different ways of responding if the US and NATO allies help Ukraine to kind of fight back with long-range Western missiles.
Whoosh. Now, while you were off, that exact story affected palladium. We had
because of Russia
7% move in palladium with potential G7 sanctions. Now, has that continued on? Let's have a look at the palladium chart. Now, of course, Ange and I have been looking at palladium because we think that hybrids are going to be around for longer. Palladium used in catalytic converters. But look at that chart. At last, it started to work.
Yes, and also it's not just that. It's because the palladium itself is so reliant on Russia, right?
40% of global supply.
Yes, exactly. And if anything goes wrong with that supply chain, then you can bet that the price is going to go up. So because of those very small indicators, that's why I really like palladium, because it's not like oil when so many things are in the mix. Palladium only has pretty much 2, maybe 3. And Russia is, still a key supplier of palladium.
But if we go back, look at where it's come from. Right, for a commodity that may be in higher demand in the future than expectations are, because of course it was being priced. All this was the move in electric vehicles, expected to take over from all petrol within 10 years. Then if we start to get a move into hybrid, then, you know, there has not been investment into palladium mining for the last couple of years. So that's an interesting one to watch.
I have one for you and one for our trader friends watching. So if you can give me the answer, amazing. Because that story last week, it was that Bloomberg report, right? US asking the allies to look at considering slapping sanctions on Russian palladium and titanium. And then I started thinking, how can I trade the titanium side? Like, who produces? Trader friends, if you have any notes whatsoever, Andrew, Monkey Man, anyone, if you can give me a titanium trade, I would love to hear it, because it's not something I normally trade. Titanium is used in medical devices, so hip operations, and so there's demand there. But it's also used in
Nightclubs.
what?
Titanium. Come on, David Guetta.
God.
My singing's about as good as Obama's rapping.
Clearly, we don't dance to the same music. Who sang that?
David, well, I'm not sure singing is the right.
So yes, I'm looking for a titanium trade, because if these sanctions get slapped on and is confirmed, I don't know whether it's confirmed yet. It was a Bloomberg News report when I last saw it. Then you know, if Russia's one of the few suppliers of titanium and they're listed companies based around this, then I would be bullish, right? So yeah, interesting one to watch. Spot palladium in the last week hitting a 1 month peak. But as you saw Richard's chart, it is quite impressive, that move, palladium.
Right, we've got a great question from Andrew. Andrew, if you don't mind, we're just going to wait 10 minutes and we'll take that into confirm and send as well. And we've got Monkey Man saying that Trainline, he is interested in Trainline because he thinks that it keeps on rolling along.
That's a fourth one this morning.
So let's see exactly. Oh, it's now up 11. Wow, now that was a buy on the open. Wow. Trainline opening up 5%, now up 11. Oh, we've got Phillips open.
Is down.
Right.
Yeah, that's the 1 minute chart, people. Gonna try and see if I can scalp that.
Which way?
Oh, down.
You think it's gone lower?
Look. Maybe I wait for the bounce to be safer. But look at the daily chart. That it's now down 12.7%. Maybe I'll wait for the bounce, and then that's a bit safer. But for those of you that trade the bounce, what I tend to look out for is a big drop and see where it hits the support level. And then I try and trade the bounce up to the next resistance point. So if it bounces, for example, at 25.75, I'd be looking to trade for the bounce to go up to 27.60, around there, and then take it off. If it breaks through that, then I'm looking for the bounce to head up to the next support level around 29.25. But at the moment, it hasn't yet bounced. It's still on that level, down on the day, with just 18 minutes in the session.
Well, no, not for Phillips.
12.5%. Not Phillips. How long has Phillips been?
I think that it only opened 3 minutes ago. So yeah, we got.
Because it was suspended. So down 12.5%. That is painful. Do you hold Phillips?
Do you know what? I haven't traded this since about 2009, I don't think.
Yeah. Whoa. I mean, it's just, look at the volatility, the rises in the 25th of April, 28th of July, 2024 as well. How many men does it take to change a light bulb? Oh, they sold off that bit, didn't they? They did.
Sorry, I got lost there.
The guys in the gallery are saying there must be a Phillips joke here somewhere. So I said, how many men does it take to change a light bulb?
Is there an answer? Is there a punchline? Come on, Ange.
There is.
We've right. So BP down 1.8%. That seems to have found some support there. We've got Shell down 1.9 and Total down 1.2. So it really is a story of the airlines versus the commodities and oil plays this morning. We've also got, Trainline the big winner, Phillips the big loser. With that, we're at in-trade expectations, so 8:45 this morning, we're going to go through all sessions, because of course the all sessions are open. Boeing's going to be the one to watch there, because we've got noise around the fact that their 15 billion capital raise could come as early as today, remembering they haven't settled that the workers' strike yet. In addition, in the numbers last week, Ange, the CEO said that the cash burn will go into Q4 as well.
Wow.
So I was short puts, managed to close them. I think, it's not looking as good as it potentially could have been last Wednesday.
But, Boeing likely to, how long has his strike action been continuing? I mean, it's got to really hurt now. Given all the walkouts and people not at the factories. And I just think that, Boeing, depending on how it's going to handle getting people back, onto the factory floors, it's got to do it soon. And this capital raising, if it doesn't do something spectacular, isn't really going to help the share price that much, is my thought process.
Where would you get $15 billion away? Because it was 10 to 15, remember, right? So if they're coming and doing their 15 billion, what kind of discount is that going to come at? So I'm just looking at average daily volume for Boeing. It looks like it is trying to get, now where is the average daily volume? Not sure if I'm finding that from here. 8 million shares, right? So 8 million shares times 300. Whoa, what's that?
I mean, Boeing year to date, its shares down more than 40%. And also, we're looking at short interest of 2.3%. I think that 15 million is really ambitious. I don't know what you think, Rich. I just think it's really, really ambitious.
Well, I think it's about 7 days volume, I think. Let me check that during the break. But yeah, 15 billion, I think that's a good 5%. Yeah.
I mean,
right, let's go on to confirm and send. Let's answer your questions.
Hey, welcome back to Confirm and Send, one of my favorite segments in this show, because no question too difficult, too crazy, too strange. Maybe a bit strange if you're asking about Rich's wardrobe again.
Those ones, the ones that are too hard, producer Fred shows us them the day before, and I go, nope, I don't know the answer to that, producer Fred.
But we will keep those questions. I know that someone asked about, forming a cup and handle. We will get that answered tomorrow. But we have promised a few of our viewers that we're going to answer some today, right? So let's try and get through those first.
Andrew's asking, is it the case that China is selling US treasuries and buying gold instead?
Now, this is a really interesting one. Nothing has ever been officially announced. But there is a sense out there, and I go to many of these conferences and meetings. I also go to Crane Shares summits to try and get a sense, given many of my trades have to do with China. I don't have a China shirt, he has, but I tend to go there and I listen to what they're doing, because actually most of the time it's not what is officially announced that actually counts. It's the mood music, and that, especially with China, is how it works. And there is a sense out there that they are buying up gold, and especially in a time when, you know, America's eating as much debt as it can like handle, right? I mean, there have been great concerns out there that they are overdoing it. They are just taking on too much debt. You've seen Rich and I talk about, you know, the debt clock many times. And for many people who trade gold and watch it as analysts as well, we pay attention to the fact that this great support, part of it could be the fact that China is buying up gold. There is no secret out there that it has one of the biggest gold reserves in the world. But what is also interesting is, you know, in times of great uncertainty, gold still matters. You know, we live in a society where most things are transient. Certainly, you know, in the currency markets, given there's Bitcoin, cryptocurrencies, you know, digital currencies. To my mind, in my humble opinion, all that means is it gives further strength to tangible assets.
Dan asking, if they ever want to liquidate the gold, won't they have to buy US treasuries? I think this goes into the longer term plan of China potentially wanting to move away from the petrodollar. So if there's going to be some kind of BRICS currency together with the Middle East, then the gold would necessarily, how it's sold wouldn't go into to buy US treasuries, because there will be the theory being that the dollar loses its relevance and then commodities start to get priced in other currencies. So, you know, that kind of theory's been around for about a year and a half now. It's gaining traction. Janet Yellen was asked about it at the weekend. So, you know, when the Treasury Secretary starts to have to answer questions on it, then you know that it's out there.
Yeah. I mean, what we can tell you, or what I can tell you, is there's a consensus, a strong consensus that China will keep buying gold. You know, the question is how much and whether there is an increase. No one really knows out there, but at the moment it's a constant buying. I mean, I think we know that they have paused some gold purchasing, but this comes after a long stretch of consistently buying gold. And I kind of tend to agree with Rich that there is this other theory out there that if they try to come away from the dollar as the world's most liquid traded currency, then perhaps gold is something that they will use to back whatever currency they agree to create, if there is another grouping that forms what China considers its allies.
Right, let's go on to the first question that we've had from you guys out there. Are options riskier than spread bets or CFDs? Now, this reminds me of a question that the guys on the Tasty platform were asked on Friday. And that was, a viewer said that 99% of the time he follows the disciplined, the structure of what the Tasty Trade platform puts forward as the safe and the most likely potential of profit. And that is to put sell your strangles 16 delta at 45 days to expiry and then manage them from 21 days to expiry onwards. The viewer said, I do that 99% of the time, but the 1% of the time is sort of random trades that I just fancy the look of. Is that okay, or should I try to minimize those? And both Tom and Bat said, no, it's still okay. Like, we still, swing the bat every now and again, but you just try to make the size of those trades manageable. So that 1% of the time won't eat into your, hopefully profits from the structured strategy of the 90% of the time. So that was for options. Now, spread bets and CFDs, it's all relative. It depends how structured your strategy is. And if you follow the advice of the experts in Chicago, of doing those options trades, then generally that is going to be less risky than if you're just following a sporadic approach on spread betting and CFD. So quite an open-ended question.
Yeah, I think in general, trader friends, if you practice and you feel comfortable, you get to know the mood of the market, and you test and over time you actually know your appetite for risk for certain stocks. Follow the rules, don't let emotion get in the way. And it is open-ended because, are options riskier? Well, not if you put the guardrails in place. Are spread bets riskier or CFDs? Same thing. Not if you have the guardrails in place. What is the saying? If you go to the races and you pick a horse, that's gambling. If you go to the races, says Uncle Johnny, Angeline's Uncle Johnny, and you go down to where the jockeys are and you eye the jockeys and you look at the ribs of the horses, how they're breathing, if their tail is stock straight and if they're chomping at the bit or if they're foot stamping, that is trading.
Ladies and gentlemen, she is back. She is back. There we have it. Welcome back, Ange.
Oh, it's good to be back.
Yeah.
Oh, it's so good to be back.
And that's pre-coffee as well, isn't it?
It is free coffee. I'm
Brilliant.
trying to have
I look
one
the horse in the eye. I don't look the jockey in the eye. I look the horse in the eye.
And the horse as well.
And sometimes it nods and it says, "Yep, I'm here for you."
You should not.
This
Yes,
one's my race.
I'll have another bunch of hay.
No. It's term.
Oh, really?
Yeah.
I'm looking at the jockey.
Stock never does that.
I'm looking at the jockey because I want a really nice slim one.
Question number 2, please, producer Fred. Right, what technical indicators are you using most commonly in day trading, Ange?
So I really love this question.
Can we base it on EasyJet? Because my EasyJet
Okay.
is having a nice move here.
Okay, we can base it on EasyJet. Let's take a look at crude first because I like trading crude. So what I would say, trader friends, is that, when you first begin, lots of people go crazy, right? They whack on so much stuff. If you come back to me, you can see my face, which I'm telling you, it's like this is how you look when you're like, I've just started, I'm whacking on the bolly, I'm whacking on the, I've just learned about the double cup and triple bottom, and then you draw, and your entire chart looks like a complete spaghetti junction mess. Rich doesn't have this. He just has screens that make my eyes bleed. Okay. And what I would say is, for me, what I learned early on is that all that is too much noise. Too much noise. Less is more. Thank you, Phil. Less is more in the gallery. And all I want to see is how the market is behaving. And by that, I mean I learned how to pay more attention to price action, trader friends. You hear me talking about this all the time. Price action is your friend. If you have, for example, this crude chart, and you can see I've drawn a line there, I've drawn a thesis, support 70, we break through, down 70, then at 67. This line tells me that we are seeing lower lows, right? And this breakthrough, where my cursor is, tells me that the trend is changing. So beware. I've also drawn lines down there to tell me where, some people like Fibonacci, so that's great. Sometimes I have Fibonacci as well, but I tend to take them off and I draw the lines where it matches the Fibonacci lines, but only 1 or 2 really, and I mark them as yellow just so that I can see them easily. I have volume up because I want to make sure that I'm not trading into extreme volume, right? So I want to make sure I'm not trading into very low volume, which will mean that my trade might not go as expected, or super high volume. So this is almost...
Does that mean higher volatility.
Yes.
If there's if there's extreme volume.
Yes.
Right.
And so let's take a look at, you wanted me to look at EasyJet, is that right?
Please, yeah.
Okay, EasyJet.
Because my normal thing now would be to take it off and just take the profit.
Remind me of your position.
Just long from 519 first thing this morning.
So long from 519. So what this is a daily chart, and what this is telling me at the moment is that we could potentially see a further retest of around the 529, 530 level. And I want to see a breakthrough. Let's take a look at the 5-minute chart. There we go. So that is the 5-minute chart. Can you see? And then what was your level again that you're looking for?
So normally I would, because it was just a trade, I saw that Air France was up 5, oil was down 4.5, EasyJet benefit from lower oil, and it was only up 2. So I bought some.
So now I would take it off, because if you look at the 5-minute chart, can you see it's curving downwards? And you bought at 519, didn't you? Yeah, so I would kind of say, if you want to be safe, you can take it off now, or you can wait till we get to the halfway mark and then take it off. So around there, 520, 525. If it feels like, you can chill, or wait further, but I would say keep an eye on it, because once you get to your target, then you want to take it off and then re-enter if it continues falling, if you see what I mean. Right now, this chart is telling me it's turning.
Because on 5-minute chart, it's tested 528 and it didn't like it.
Yeah, exactly.
Okay.
If it goes back up, can you see, if you waited a bit and it goes back up and then it breaks through 528, then I would say we've got potentially further upside to go.
Okay.
Right?
Right. So I'm going to watch that one. I'm going to keep it on just now. We also learned how to do trailing stops when you're away.
Oh, great. So can you show me? Because that's one thing I wanted to...
On the next trade that I put on, I'll show you how to pop on a trailing stop there, because it was wonderful. Right.
If you're keen as well, trader friends, look up double tops and triple bottoms or double bottoms. I like those indicators too. I like the fact that I can say bottom repeatedly as well. But those, for a technician, are strong confirmation indicators. I like you've heard me talk about this with Frank Caberna. I like the power of 3. If you have a triple bottom, that is confirmation. That is like strong confirmation that this is on its way down. Double is kind of like, oh yeah, maybe. But 3 is, we're in play, people. We're in the game. So look out for double and triple bottoms. I use that as well.
Question number 3, please, sir. Should I exercise my long options if they are in... Now, in the US, our experts in Chicago, these guys have been trading for 40 years between each. So I think they went for pizza the other night in Chicago, and there was 200 years of trading experience around the table. Now, they will tell you that it's not necessarily how far they are in the money, it's the time until expiry. So they look to put trades on when it's 45 days to expiry, and then start to manage them with 21 days to expiry. Managing the sweet spot, exactly. Managing the trade can be rolling until the next month, or rolling to a different strike. Now, I got caught out in Tesla last week, Ange.
I know.
Oh, it was painful.
I saw. I almost messaged you, but I thought I wouldn't add to your pain.
And Tom was stuck in the same trade. So Tom Sosnoff was looking for Tesla to close at $255. I was looking for Tesla to close at $255. It was there pre-market on Friday. And then producer Fred, Terence and Phil and I went to the pub. And the Wall Street opened, and producer Fred goes, "It's down 3%. It's down 3%." And I looked at it, and it was a blue number. Yeah, exactly. Yeah. Producer Fred said that second shandy that he had.
How much did you have to drink?
So it was down. It was up 3%. He was trying to tell me it was down 3%. So then he did apologise profusely. But look at that move that Tesla has had. This was after the results. This was after the stock traded on Thursday, and then this was the stock trading on Friday. So I must admit, from that chart, it looks like it's going higher, which is a bit painful because I am short. So I am now short 100 shares of Tesla, which I took from my options position.
Actually, I did message you about Tesla.
Oh, did you?
I did.
What was the advice?
You said just bought some 230.
The 230 calls.
What did you do about?
Yeah. So I was along the 230 calls, but I was short 2 of the 245 calls, thinking that if Tesla goes up, it's not going to go up more than 25%. It ended up going up 28%.
Lo and behold.
So I lost. I lost small. I managed to sell puts, so I made some of the money back. However, now I'm short 100 shares. It's not looking great this morning.
So are you going to roll?
So I did. So I rolled. That was. Thank you for taking me back to what I was trying to say. So what I've done now, and if I can go to the Tasty Trade platform. It's in my IG platform. Is I am now short where are we, Tesla? The weekly Tesla calls at the 295 level. So I've rolled it higher and I've rolled it further on. So there we go. So it's for the 1st of November expiry. That's this Friday. And I'm short 2 of the 295 calls. Now, I received $182 for each of those. So that'll be $360 of income if it doesn't go above 295. I thought that was a decent trade. I thought that was quite a lot of premium there for a 1 week trade on Tesla.
That's good. That's really good.
Yeah, reminder, it is at 270 at this moment. So my break even's another, 9%. Which could happen today.
I hope you make money on this trade because, Tesla was your kryptonite, right?
Well, you're absolutely right. Well remembered. Don't trade Tesla. Has been proved yet again.
This might change things for you. I mean,
I stopped moving 28% in 3 days is exactly why I do not trade Tesla.
It's a lot. And also the thing with Tesla, you have to almost really gird up your loins because Elon Musk could say something and then it moves the stock and then you get like sleepless nights, right?
Yeah.
But I do like trading Tesla, I have to say, and I do have it in my longer term mix as well. But it is one that you kind of, okay, Tesla, put on the gloves.
Well, let's see if it forms a head and shoulders because that is the question we're going on to next.
How do you identify a head and shoulders pattern? So that was a lovely segue, by the way. I have a wonderful picture which I'll show you, but before I show you, I always say understand human behavior and understand the reason behind it before actually drawing charts. And I mean, I love drawing on charts more than anyone, right? Bring out your rulers and vernier calipers. I do actually own one. But understand the human behavior because we have many IG clients and premium ones too. And when you speak to them, they really get it when they go, it's all about fear and greed and understanding where it sits. Fear and greed is just the same as, where the buyers are and where the sellers are. And understanding that sometimes fear pushes more than greed. And I'm just showing you this chart because if you look at the first shoulder going up, you can see that, buyers are in control, but then they drop off to the neckline or what I fondly call as the first armpit. And then you see another surge in enthusiasm and buying, right? And it rises above the left shoulder, but then it comes swiftly down again. And it has to touch that neckline because to complete the top. Then it moves forward, the buyer's back in, but then the key here is they're less optimistic. There are less of them around. And then that forms your right shoulder when that buying drops off. And what is key is that for myself, my humble opinion is I like to see the right shoulder lower than the left shoulder because this even gives me more conviction that there are less buyers in the market. Once we break below that neckline, which is that red line there, you know that you can then draw and get your minimum target, which is the blue line, and you can measure that from the head to the neckline and measure it correspondingly underneath that right shoulder. Now, don't forget, just like we saw with Rich's belt when I showed you how to have, put together your guardrails and to make sure that you have your stops in place, charts and price action don't tend to go in a straight line. They meander everywhere. They kind of walk a bit up and down like Rich and Fred after coming out of the pub. Okay? So some people call this a walk, some people call this a retest or a throwback. It's the same thing. And you'll see some movement. And when you have this throwback and you see it touch that neckline on that chart, that's even further indication. It moves lower that, we've got a head and shoulders formation in place. Now, one further warning from lower volume on a rally into the head and shoulders, ideally, we are looking, and think about this logically, ideally we're looking for higher or lower volume as you get further into this chart pattern. We're looking for ideally lower volume, right? Because it means that less people are coming into the market. And then volume may increase again in that downward break because you've broken past that neckline and you know that selling is now in play.
The graph that you used there reminded me of one of the most fantastic market psychology pieces that I've seen. So this is it on my screen here.
Oh.
So this is number 3. Damn, I missed the consolidation. But if I wait any longer, I won't profit from this trend. Let's buy. Right. So obviously they buy, then they receive the psychological confirmation. Good thing I didn't wait. And then it starts to go down and it starts to plummet. It says, I'll use this correction to increase my position. Ouch. As soon as this goes back up, I'm selling out, right? So number 7 is the important one because that's when you go from being confident to, oh, right, I need to get out of this. I'm going to wait till it rallies again. That's why you get resistance. Because as soon as it goes back up, I'm going to get out of it because you're relieved you're not losing money anymore. However, it doesn't. It carries on down.
I love number 10.
Number 10. What are the SEC doing about this? What do people know? Why is it plummeting? And then you make that horrible decision there. Enough. I'm selling out. I'm getting out of my position and I'm staying out. And then that inevitably, it's not quite the low, but good thing I sold everything, and then it starts going up.
And just a quick note, that head and shoulders formation, but I love the chart that Rich just shows. It's a funny number 10. What is the SEC doing about this? But the one that I showed you with the head and shoulders, that was from the STA site. Great course there. Any of you wanting to do a technical analysis course, do look up the STA. There's level 1, level 2, but it give you the inside outs.
Excellent. Time for break. We'll see you in 5 minutes, and it is going to be time for trade expectations.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive. global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered. Live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
CFD trading is the buying and selling of CFDs, or contracts for difference. As a derivative product, CFDs enable you to trade shares, indices, forex, commodities and more, without ever needing to own the underlying asset. When you trade CFDs, you trade the difference in the price of an asset from the point at which the contract is opened to when it's closed. As you don't own the underlying asset, you can trade markets that are falling as well as those that are rising. So, how exactly do you trade CFDs? Each contract has a buy and a sell price. Sell prices are slightly lower than the current market price, and buy prices are slightly higher. The difference between the two is referred to as the spread. If you think the market will rise, you would buy. This is called going long. If you think the market will fall, you would sell, known as going short. The more the market moves in the direction you predict, the larger your profits. If it moves in the opposite direction, the greater your loss. CFDs are traded on leverage, which means that you only need a small deposit, known as a margin, to gain full market exposure. So, if you wanted to open a position equivalent to 500 Apple shares, you might only need to put up 20% of the cost. Your profit or loss is calculated based on the full value of the trade, however, which could mean magnified gains, but also magnified losses. So, when trading CFDs, you should always keep an eye on the potential downside. Take care to manage your risk with stops and limits. Visit IG Academy to learn more.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome to IG's Charting the Markets, your gateway to expert technical analysis and market forecasts. Our video series breaks down the complex world of technical analysis into three key asset classes: indices, forex, and commodities. Watch as IG's expert analysts dissect charts, spot trends, and provide actionable insights. Whether you're tracking global indices, navigating currency pairs, or exploring commodity markets, we've got you covered. Sharpen your technical analysis skills and make informed decisions. Join us for Charting the Markets every week in IG's trading platform and on IG.com, where data meets clarity. Start watching now and stay ahead of the curve.
Welcome back, and we are at Trade Expectations, where we talk about some of our plays of the days, or sometimes we have Tom W on. Where is Tom?
Tom was filling in a lot last week, so we've given them today off.
Well done.
And Pega is on holiday.
Nice.
So this is normally Pega's time to, teaching Pega to trade. So we'll have a look at some of her positions, but also, of course, what we don't usually have is the US Open all sessions at this time. We do have it this morning, so let's take a look at the big movers. Another screen that I have built over the weekend. So this is the first time you'll have seen this one. Let's make sure, first of all, you can get the max. Now, on the left-hand side is all your, what I would call your main stocks, right? The top names in the NASDAQ, top names in the S&P 500. And I'm going to take it through, as we do with the other screen, all the gainers and then all the losers. On the right-hand side is a bit more of the, what would you call it? High volatile things
I'm
like
just looking at.
MicroStrategy.
I've lost money on MicroStrategy before, and they are considered a sort of my link to my kryptonite, right? A whole kind of crypto.
Yeah, so over there, I'm not sure about Qualcomm. Maybe I should have put Qualcomm. Ben Buthwell, if you're watching, there is your Upstart. I've included Upstart in there on the right-hand side. So this is stocks that are traded, but they come with a bigger risk warning, let's say.
Yeah. He's really doing well on this Upstart.
He has, yeah. He shouldn't have gone back in, and he did, but why listen to me? We see Exxon down 1.7 there, Chevron down 1.3, Boeing only trading down 73 basis points. Ooh, well, that's one of our viewers was right then, because he is long a bit of Boeing. 15 billion, the top end of the range that is being talked about. Have they got a partner? Has somebody come in to buy some of that 15 billion of equity that's coming out? We're waiting to hear. Hopefully we hear that by 10 a.m. when we're on air, because I'd be tempted to short, if anything.
Yeah, me too. But also Boeing, be careful. If they have any news, sometimes it leaks out after the close, I've found in the past. Especially when it's like bad news or really big news. Sometimes it comes after the
This
close.
was the surprise. They went to a vote with the workers on Wednesday. We assumed if you're going to a vote, then you've got it in the bag, right? But they say no. The 35% over 5 years is not enough. They still want 40, and they want more on the pensions as well. So tricky for Boeing there. Plus the numbers with those comments around the Q4 is going to see a significant cash burn as well. There just wasn't too much reassuring. On Tuesday, I was feeling pretty confident about Boeing, but we'll see how that capital raise goes today. What else do we have on the winner's side? We've got Delta. Delta are suing CrowdStrike.
Yeah.
So they've actually gone ahead with that.
I can tell you they something needs to be done, because I was actually affected by CrowdStrike. I was in Heathrow, flying into O'Hare to see the Tasty crew.
This was when you were in Chicago that it happened,
and
right?
I thought, yes, I missed it. It's all done and finished, because I flew the following Monday when the CrowdStrike thing happened on I think it was a Wednesday, Thursday, Friday, right? And then the weekend, it was still kind of like coming out the wash. And then when I arrived in O'Hare, I thought, I'm still in the middle of this, because every American that was stuck elsewhere had to fly in through American airports that they weren't meant to fly into. So O'Hare had a queue so long that you couldn't disembark the plane. Like they told you, we have to let you wait on the plane, watch more in-flight movies because you can't get off yet. And to get out of the airport took me 3 hours.
Oof.
It was half my flight time, might I add. the people there who looked like they hadn't washed in days, Americans who were trying to get back to Austin that had to fly through Chicago. It was awful.
And was this Delta flights then? That we're talking about Delta
so
CrowdStrike.
Yeah, so it was Delta, and I also flew United, but by that time it had kind of moved on a bit more, and they had more of the Americans on to where they.
So those stocks all benefiting from the oil price move as well. Leading top of the leaderboard there, the three American-based airlines. We got AMD up 1.7, Google ahead of numbers this week up 1.4. So yeah, Nasdaq really getting back towards breakout territory. Now, Axel Rudolph is on the show in 15 minutes, and we've got a bone to pick with him because we've
bearish.
got,
we're getting a bearish Axel.
No, but it's at his stop. So Nasdaq, his stop was 20,550. So we're getting up there. We could breach that. So it's going to be an interesting conversation there with Axel, back from his holiday. Of course, he joined us from the balcony on Friday.
Nice. This is in Menorca.
This was in Menorca. That's right. Yeah. We also had a competition to see if they could guess.
He was actually secretly in Magaluf.
Yeah.
Not Menorca.
With a background on.
I've been to Menorca. It's amazing. Absolutely incredible. It's so pristine. Now, talking about flights and shares and all that, I was looking at your EasyJet, which is now going back towards, well, last time I checked, going back towards some upward momentum. But let's take a look at that. Can you see? So, if you wanted to hold on this, right, and potentially, hold for longer, then the decision here, this is the 5-minute chart, is for that to break through that 5 to 8 level with conviction. And currently it is very close to there. But buyer beware though, because each time it touches that level, that 5 to 8 level, it seems to pop back down again. And that's what's making me feel a bit nervous about this.
Excellent.
You've got your close eye on it,
yep.
Rich. So,
happy days, happy with that. Thank you for that. Right, now, oil trade. So, sitting at brunch yesterday, my girlfriend, the German economist, our usual Sunday morning chats are, of course, about geopolitics and the economy.
You guys need to get out more.
So, we had a great discussion yesterday on oil and the Middle East and Trump, okay? And it got me thinking, if, as newspapers report, oil is in oversupply here, right? And we get a de-escalation in the Middle East, so the danger premium comes out, and Trump wins the election, so it's drill, baby, drill. So we get more volume coming on. Where is the downside support for oil? Now, previously, I've always thought that it was from the strategic reserve, that they would top up reserves again. But I'm not sure he's got the money for that, right? I'm not sure that anybody's going to take that decision until January. So maybe there's not some support there. So my play of the day, I guess, trade of the day is to short oil here, which I know is dangerous. So I'm already short £2 a point. I'm going to go short a further £2 a point. But because of that danger, I do want to sell a put because I do think that there's support there somewhere. Now, how far out, the question is, how far out do I have to go to get, something that's a decent bit of premium there? So we're going to look at, first of all, I'll look at February because that's just before Trump or Kamala will go into power. I think that's like the 21st of January it comes in. Not 100% on that, but I think, it's about then. So what do we get for something like does it drop as much as 55? Is there even down to 50? It's only 40 cents there. So about 1% is the 53.50 level. So I'm going to sell some puts there.
What, at 55?
53.50.
Right, okay.
53.50. And that would be in the same, let me see, if I do one of those, that takes in, so $680. That's £10 a point. And then that is going to be my oil structure. However, there is always the chance you can be wrong. So how do you cover yourself if I am wrong? For that, I'm going to look at a slightly shorter term call option. And that's going to be maybe expiring 15th of November. And so, now, if we get a big move up to say, 75. Now, I'm not sure what would cause that here, right? Because today's news is negative, but I don't want to be naked short. So, do I look at some kind of protection around here? But what I was going to do would be a call spread. So going out even further would be more, the 75, I'd pay 124 for this. Let's zoom in a little bit. 123 ticks. If I was going to sell the upside on that to try and cover some of the cost of that 123, could I go up to 85? If I sell two of those, that's then 56. I'm still paying around 70. So that is it's a bit of a trickier one to protect yourself on the upside. But of course, I'm already long BP, so maybe that does it. But for today, I am going to be short oil, and then I am short that put, which just gives me that trade that I'm happy with on drill baby drill, no escalation in the Middle East, and also a potential global slowdown from where we are at the moment. That's my play of the day.
Cool. Are you going to, because everything is about timing. So when are you going to put that on? Today?
I've just done it.
Oh, amazing.
On screen right now. So yeah, so we're short oil here and then short a put at the 53.50 level. So
we've got Axel standing by, but just a very quick note. My play of the day is NVIDIA. I have NVIDIA long as well in my pension funds, but we will talk about that when we come back.
And when we get back, Axel Rudolph is going to be joining us for our technical analysis update and to hear how he got on in his holiday. Join us after the break.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are four major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket. Options. A hugely powerful trading tool with a wide variety of uses. An option is a contract that gives you the right, but not the obligation, to trade a financial market at a set price before a set date in the future. You pay a premium for this right. Options can have daily, weekly, or monthly expiry dates. Say you think the FTSE 100 is going to rise in the next week. Instead of buying the FTSE now, you purchase an option to buy it within the next 7 days. This is known as a call option. It gives you the right to buy the index at a set price, called the strike, before the option expires. If the FTSE moves above the strike at any point within the 7 days, you can exercise your option and buy for less than the current market price. If the FTSE drops instead, you can leave your option to expire, losing only your premium. But options aren't just used to buy a market when a market goes up. Put options give you the right to sell a market at the strike instead of buying. This can make them a great tool for hedging. Say you own Apple stock and are worried it's about to fall in price. Instead of selling your stock immediately, you purchase an option to sell it with a strike that's close to the current market price. If Apple stock drops, you can exercise your option to sell, preventing losses by selling above the current level of the market. If Apple stock rises, you can keep it in your portfolio, again, only losing the premium. You can also use options to speculate on price movements without ever intending to buy or sell the underlying market. That's because an option premium will change over time, depending on how likely it is the option will become profitable. If you purchase an option with a low premium, you can sell it on if it becomes worth more as it nears expiry. With IG, you can trade an extensive range of call and put options on shares, indices, forex, and more.
Welcome back, and we are live from the IG trading floor with the one and only Axel Rudolph. Axel, thank you so much for joining us all the way back from Menorca. How was the weather?
It was fine until I spoke to Rich, and then it all went downhill. We had a storm, which is really, really rare down there. It was a bit tricky at the end. I mean, chairs were flying all over the place, and it was quite rainy. Lots of big waves, so very strange for the Mediterranean for that to happen.
Oh, and how long did that last for, Axel?
All of Saturday, which was my last day, Rich.
No.
So on Friday, obviously, when the weather was absolutely perfect, and then sod floor on Saturday, it wasn't.
200 litres of water per square metre. Did it feel like 200 litres per square metre?
It felt like a lot of rain, I have to admit, yeah.
Wow. Menorca's normally really dry.
Some would say it was karma for you sending me the picture after our chat. You sent me another picture to Teams of your wonderful background you had there. Slightly different today, isn't it?
It is, yeah. No, I just sent that to you because I saw the show afterwards. It was all blurred out. It wasn't. You couldn't see the horizon. So I thought I might as well show you what it was really like. No, it was wonderful. I mean, it was really great. Yeah. Even though we had all the massages, everything was already booked out because we were too late. So we did other stuff instead, read books, etc. So.
Now, unfortunately, I will not be going there because I was stopped out on our short Nasdaq trade, Axel.
It was stormy. It was stormy for him, his Nasdaq trade.
It was a good. I liked the trade. It felt good, but. It's just, it feels unstoppable just now, the Nasdaq, doesn't it?
I totally agree with you, and I didn't go short the Nasdaq, but I went short the the DAX, and I looked really clever on Friday when the market closed. It was up quite a bit, and then this morning it just came in much higher than expected. Obviously because of the relief rally as Israel retaliated on Iran, but didn't hit any nuclear or oil refineries, anything like that. And that relief has led to the Nasdaq trading back to its 1.5 months high, which it hit on Friday. And on the DAX, it's quite similar. But I've flipped my strategy around. I'm now long. I've made my losses back. I'm back in profit. And it looks as if the Nasdaq's going to go and go over that high. We had our stop in. Yes, I know. You got stopped out on Friday, I guess, very briefly, didn't you, Rich?
Right on that US Open. And I think I was only 20 points wrong as well. The actual high, it ticked it 20,550, and then it came off, and I think it closed down 20,400 or sub 20,400.
Yeah. But that, you see, the good thing though is, yes, you did get stopped out, but you had 2% of capital, that you risk a maximum, I guess. And you just stuck to your rules. And that's the problem with a lot of traders. They think, I got stopped out. I could have made so much more money because I was just stopped out by 20 ticks, etc. And yes, it might be painful, but believe you me, if you do it correctly over time, you will make money if you have an edge in the market. But you won't be able to do that if you just have a few positions which go offside, not just 20 ticks, but it could be 200, 2,000
Totally.
points.
Totally.
And then it wipes out your trading account.
That's why I always like stops, and guardrails in place. Axel, for those of us, and many of our clients come to you for this, because I know IG clients love trading indices, especially the Nasdaq, the S&P 500, and especially the Dow as well. What are you looking out for that is going to stop this constant, almost like constant melt-up that's in play?
Well, first of all, we have to see today whether the relief rally we're seeing in equity indices is going to last into the US session or not, because that will be a big determinant. And then I guess earnings. I mean, we've got Microsoft, we've got Meta, I believe. Yeah. The big five, we've got some left. I think that's on Wednesday, isn't it? And basically that might change things. But I've been wrong. I thought the market was going to top out here, and so far it hasn't. So now my view is, where's the last relative low that was made last week? So as long as we hold above last week's lows in all of these indices, the trend's your friend and still pointing higher. So I'll just have to wait for the next opportunity. I mean, the negative divergence I saw last week is still in place in some of these markets. So we'll have to see whether we could get, sometimes you get a triple negative divergence. You get 3 higher highs and 3 lower lows on the oscillator, and we've had 2 so far. So it could still be a reversal pattern, but right now the trend's your friend is still pointing upwards.
Now, on the trend is your friend, with the news over the weekend, Axel, on gold, with regards to gold, with the Middle East, if this is a de-escalation that a lot of people in the media are talking about, and oil price down now 5.5%, those are both negatives for gold. One, because it's not as much of a safe haven is needed, and 2, the inflationary pressures disappear. So for me, I think gold should be down 1.5% today, considering where it is. Does the trend stop fundamentals in this case?
I don't think so. And fundamentals, don't forget, we have a lot of central bank buying. So at the moment, what we tend to see is every time the gold price comes off a bit, somebody's buying it again. And that might be central banks, not just China. Yes, so as long as you've got that fundamental buying pressure behind the market, there's no reason to believe that it's topping out in any major way. And I'm still long gold. I've been long for years now. And it's a very healthy trend. And don't forget, I mean, if you look at the S&P, we've made 47 new highs, record highs this year. And I remember some people saying, after 3 or 4 of those, can't go any higher, can't go any higher. Well, it's the same
Look at where we are now.
Exactly. Yeah. So I wouldn't go short gold here at all. Plus, it doesn't fit into my view at the moment because I think equities are looking a bit toppish here. But as I said, I was wrong so far. We'll have to see. Now I'm playing it from the long side because I'm just following what the market's telling me to do, and the trend is our friend. So I'll trade that.
I'm long gold ETFs as well, gold mining ETFs, Axel. Do you think all of the November 5th, the US election sort of risk premium is already factored in, or do you think there might be some more and we could see a further sort of boost for gold as we approach that election date?
Well, we could always see, because quite a lot of volatility usually does happen the days just before and just after the US election. So that is a possibility. But the interesting thing is, you've just talked about an ETF with gold miners in those. Obviously, gold miners are not the gold price itself, Angelina, as we all know.
Yeah.
But it used to be the case, if you looked at the last few years, that you'd get a much better performance in an ETF with gold miners or gold mining stocks than you would get in the spot gold price. But this year, it's very similar. So I think it was about, I looked last week or something, about 28%. For both of them. So it's an interesting one, but I do think we will see a little bit of volatility around the 5th of November election.
Now, talking about volatility around events, the budget coming up this week. I've got the Euro GBP up on screen here, Axel. Is there anything, that's the daily. Is there anything to look
Well,
in this?
I mean, it's a risky trade, but for those of you who follow me on my daily professional FX technical analysis that is published by 7 a.m. in the morning, which I used to do for investment banks back in the day, we went long the euro against the British pound. And the reason is, if you put an oscillator at the bottom of the screen, for example, an RSI or something, you will see there's, again, positive divergence. We've had the support area we've tested over the last few days hold just above 83, just below 83. And here, can you see the low we made last week? That low, exactly that low on the price low, that low there is on the oscillator a higher low than the previous low that was made just a few weeks before. So basically we've got positive divergence, possibly at major support, and therefore from a risk reward point of view, I went long euro sterling. So the play here would be that sterling could fall further, and thereby the euro would appreciate versus the British pound, on the UK bond. Who knows? Maybe everything's already priced in, and the tax rises, etc. Everybody's expecting in the UK won't be as great as people think, and maybe the spending won't be as great as some might fear, etc. But from a risk reward point of view, because we're very strong support here, I'm risking just I think it was something like 30 or 40 pips. But if I get it right, I'm going to make 100, 120. So from that point of view, it might be an interesting play.
I like that. And then just remind people how they can see your work each morning on that newsletter.
Well, it's premium clients only. So if you are a premium client, you can just contact either you two or me or anyone at IG, the premium client manager, and they will just be added to the daily distribution list. So it's an email that goes out every morning. As I say, I used to do this for investment banks beforehand. We won several awards in our team in the FX Euro Money survey. I think we won it twice in 2014, 2019. We were ranked in the top 10, the top 3 for 10 years in a row. So it could be very, very useful research, technical analysis research for clients, for premium clients, if they are interested in trading FX. Because I also have hypothetical trades on there with hypothetical stop loss levels, targets, etc., which I adjust on a daily basis. You can really see how my thinking leads my trades, basically.
Cool. And speaking of which...
I'm going to be the first one, because I don't get that each morning, so I'm going to
He's
get
putting
straight on.
And you are a premium client, aren't you, Rich? So.
Yeah, he is. A quick question, because as you rightly say, Axel, it's such a monster week. You know, we've got the Magnificent Five. We've got, amongst other names, reporting. A selfish question here, because I am very long NVIDIA. In fact, I would say uncomfortably long now. And
Show off.
It wasn't by design. It was a happy mistake. Those things sometimes work in your favor. But how do you manage risk if you're really long Nvidia now? Because
I think you've just answered your question, haven't you, Angeline? Sorry for interrupting. You said I'm too long here. You take money off the table. I think last week there was a new ETF launched, which is the S&P 500 without the Magnificent Seven. So clearly there's demand.
At last.
Exactly. Because you're not the only one, Angeline. More and more people, and especially professional investors, funds, etc., are worried about this extreme valuation they have with regards to the Magnificent Seven. If you look back to the .com boom, I mean, we're back at levels seen back in 2000. So there is demand now for trading the S&P 500 without those Magnificent Seven stocks. So maybe you could switch out of NVIDIA and go into an ETF like that instead, at least to some degree. Or if you want to run your position, what you can do is maybe move your stop up to the second to last relative low. A relative low, as you probably both know, is simply a low on the daily chart where you have a daily bar or a candle, which is lower than the one to its left and to its right. So basically lower than the previous day and the next day. And those are the inflection points in the financial markets. So if you have one low, that itself doesn't mean much, but if you have a next lower one to the left on your chart, that's how I like to move my stops up. And I do this in as you know, in our in-house seminars we do here at IG at headquarters, and also when we go up, I'm going up to Manchester, I think, in a couple of weeks, where I'm going to see some clients. I went up to Birmingham just last week, where we do these workshops on risk and money management and showing people how to move their stops, because that's something a lot of people struggle with.
Wonderful. Is that part of the Tom Sosnoff trip to Manchester as well, or is that a separate one, Axel?
That's a separate one. It's about money and risk management for our clients, basically.
It's the Axel
so that we can
Rudolph
also
show.
see them in person. No, I'm going up there with the PCMs. They're taking me with them, basically, the premium client managers. So.
Lovely. All right. Well, we've got NVIDIA done. Risk management, other risk management tools. We're getting lots and lots of questions, Axel, from our viewers, our trader friends, about other risk management tools that you would recommend.
Well, I mean, it depends what you want to do, but on the IG platform and also on your phone, what you've got access to is a trailing stop loss. And you can basically say, for example, if you're trading the FTSE, if I'm long in the FTSE and it goes up, every time it goes up by 10 points, I want to move my stop up by 10 points or by 5 points or something like that. So you could just have that in there. It would just stop you out if you have a reversal which is slightly bigger than the average of the day, for example, and it goes against you. So you can use that, a trading stop loss. What I would do with regards to overnight positions, especially if you have big positions on, because of the fact that we have more and more fat tail events, so basically these black swan events, which are very rare, but statistically happen more often nowadays than they used to 30 or 40 years ago, because of all the algorithmic trading, black box trading, these sort of things, fat fingers when investment banks put a zero in too much, and they say billion instead of million.
Yeah, not mentioning Citigroup like in Sweden at all.
So because of these things happening more frequently nowadays, it's very important that you have a guaranteed stop loss in, because when things do go wrong, they can go horribly wrong within milliseconds. There won't be any way you can react to that if you spread that. But the guaranteed stop loss is basically the same as your normal stop loss. You pay a wider spread if you get stopped, but if you don't get stopped, it doesn't cost you anything. And basically, IG takes on the risk. So from that point of view, you can sleep soundly at night because you've got an insurance policy. So I would definitely use a guaranteed stop loss for positions which could potentially hurt you a lot, because the last thing you want to do is wipe out your account with that one trade. But it does happen.
Yeah, absolutely. The all the risk management steps like that. It's great to have all the different options in your portfolio, isn't it? So certain trades you're going to put guaranteed stop, certain trades you want to hedge it, certain trades you want to have an option in there to to cover yourself. It's all adds up over time, doesn't it?
I've never used the guaranteed stop loss. What is the cost? Have you ever used one?
Yeah, there's a minimum amount until you can have it. So like, a sort of 3%. But then also I think there's maybe an additional, a little bit, you pay additionally, like another 0.5% or something to make sure.
It really depends on the market you're trading on. And also, as you said, Rich, it depends on the size you're trading.
Yeah.
Yeah.
But yeah, it can certainly save you on occasions like that Swiss franc depeg from the euro, right?
Definitely.
Right, we have to leave it there, Axel. Thank you so much. We've run out of time, but always a pleasure to have you on. We are going to catch you again, I'm sure, sometime soon. But we've got market measures coming up next.
Excellent. Thanks, Axel.
Thanks both. Bye.
Welcome to today's market measures. So we're going to look at the different types of options risk. Okay, so all the different risk around options, we're going to look at the different types. Let's get stuck into it straight away. So the short undefined risk strategies technically have the potential to take unlimited losses, but there are ways to estimate those losses that are likely to occur in practice. That's because there's different types of risks and you can mitigate certain types in your portfolio. So let's recap some of the ways to define option risk using the example statistics for 16 delta spider strangles. Remember, we put those on at 45 days to expiry. Now, one way to quantify the risk of a strangle is by using the standard deviation of the P&L. So here you can see that is for P&L per trade per one lot. And since there is a skew to this distribution, this metric is not ideal for estimating the tail risk. So this can estimate the range of most likely losses. Right, so this isn't the worst case or anything like that. That's the most likely, Ange.
I love skew. Baby Shark loves skew as well. We talk about skew a lot.
Mm-hmm. Well, yeah, in this instance, it's just that this skew can be your downfall here. So, yeah, this gives you an idea of what the most likely loss will be, but it doesn't give the most dangerous or worst case. Second of all, volatility of P&L. For early managed 16 delta spider strangles, roughly 88% of losses fall within 2 standard deviations of the P&L mean. In other words, 88% of losses are smaller than 134% of the initial credit, which is great because 134% of the initial credit, that's not going to wipe you out. Now, what about the conditional value at risk? So the VAR is the risk measurement that all the investment banks use, and that looks at your, a number of different scenarios, lots of back testing, and the VAR gives you that whole risk management system. But conditional VAR gives you an estimate of the most likely extreme loss at a certain likelihood level. So for example, early managed 16 delta spider strangles, in the long run, losses can exceed 200% of the initial credit, but at most 5% of the time. But 5% of the time, that is not going to be enjoyable. Not at all. Now, buying power reduction. Remember, your BPR is like your margin when it comes to the tastytrade platform. When a short premium trade is placed, a certain amount of capital is reserved to cover potential losses. So that is your BPR. Now, look at the probability of the loss exceeding the BPR, right? 0% if you manage it correctly at 21 days to expiry. That's quite nice, isn't it?
Yeah, tasty people love that. Get out! 45 days to expire, then to 2021, get out, get a move on, or roll.
And
that's good.
If you take it all the way to expiration, then there's just a 1.1% probability of exceeding the BPR.
If only our lives could be calculated like that for 0% probability of loss.
Well, I guess, yeah, that's driving below the speed limit, wearing your seatbelt.
Well, you could still get hurt by your seatbelt, you know. There's always when do you ever get 0%? Never.
Yeah, that's it. Yeah, I was surprised to see that there was a 0% probability of loss exceeding the BPR.
I thought even 0% alcohol is not truly zero. Mm-hmm. I would know that because I checked it out.
Right, so BPR, historically nearly all losses have been covered by the contract BPR for 16 Delta Spider strangles. Although losses can exceed the BPR, it can still be used as a practical estimate for the worst case scenario. So it's, in other words, rule of thumb, take the BPR as your worst case scenario. Now, there's correlation risk. Positions with a large positive correlation have similar directional tendencies and tend to be more volatile than uncorrelated positions. And do you want to take us through the test for this?
Okay, I love tests. You don't like back testing, do you? No. I love back testing. For different ETF pairs, compare the following. The sum of the variances of two separate portfolios, each with $10,000 in initial capital and 20% allocated to one of the ETFs in the pair. The variance of one portfolio with $10,000 in initial capital and 20% allocated to each ETF. So 40% allocation in total.
Right, so let's look at that across different pair trades. For the uncorrelated pair, so spiders against gold, the combined portfolio variance equaled the sum of the individual variances. For the highly correlated pairs, the combined variance was 70 to 90% higher. But those dream ones, the inversely correlated pairs, no such thing as a free lunch. Well, inversely correlated pairs are exactly that. They are your free lunch. Spider against TLT showed a 40% reduction in variance due to its negative correlation. And there you go in the table. There is your, well, Spider and QQQ, QQQ being NASDAQ. 91% increase, obviously. Ranging down to look at that TLT when you've got a minus 39% reduction in the variance. That's really useful. So what's our takeaways, Ange, from the different types of options risk?
Although undefined risk strategies are technically exposed to unlimited losses, there are ways to calculate more realistic loss estimates. Some examples include volatility of your P&L gives the most likely loss range. Conditional value at risk gives the likely extreme loss at some likelihood level. BPR gives the likely worst case loss. Correlation risk gives us the correlated assets, the sense that correlated assets move together. I really like this actually. I'm going to take a snapshot after this and keep it on my wall of blue tack that my husband hates because there's blue tack everywhere. But what I find more useful than understanding whether or not a trade thesis is going to work is how much is this going to hurt me if it hurts me, right? Yep. And this gives you a really good idea of how to manage that risk. Exactly,
especially, VAR, that VAR is what investment banking desks live and die by. If your VAR is too high, the risk manager comes and gives you the tap in the shoulder, and that's it, position off. Great, thank you very much. That was today's market measures. We're going to take a quick 5-minute break. When we come back, we're going to go through every single result of the week that we've got coming up. We have this on Thursday. This peaks at around 15 different sets of large cap results.
That's right. We're also going to go through Rich's EasyJet trade, and we'll also talk through some gold trades, and some of you asking whether or not, I think this is the Duke of H asking whether or not we have Berkshire Hathaway shares all sessions on the IG platform. We do indeed. These are the B shares. So we'll be right back.
Hi, I'm Sean Murison, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome to IG's Charting the Markets, your gateway to expert technical analysis and market forecasts. Our video series breaks down the complex world of technical analysis into three key asset classes: indices, forex, and commodities. Watch as IG's expert analysts dissect charts, spot trends, and provide actionable insights. Whether you're tracking global indices, navigating currency pairs, or exploring commodity markets, we've got you covered. Sharpen your technical analysis skills and make informed decisions. Join us for Charting the Markets every week in IG's trading platform and on IG.com, where data meets clarity. Start watching now and stay ahead of the curve.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Welcome back, everybody. So, the most important section of the show this week. What is coming next? We've got a whole heap of earnings to take you through and big macro as well. Thursday and Friday, the biggest macro I can remember condensed into one day. We get inflation, we get jobs, and we get some manufacturing data as well. Philips.
I know. Philips is painful.
Ooh.
Painful.
Down
Take a look at my
16%.
chart. Oh my goodness me. This is the daily chart. 16.2% now. Should have shorted. I really wanted to short.
We got the 2-minute chart there as well to see how it's sold
look at
off
how
during the day.
painful it is. For those of you just looking at this right now, we were waiting on this this morning, Rich and myself, but it was suspended for some time. In fact, I was just saying to Rich that I've never seen a stock suspended halted this long ever. And look at that big gap down. And it's now down some 16%. All this because of that news relating to China. What else? China. We also had oil and airlines doing really well today, didn't we?
That's right, yeah. So BP down 2%, Shell down 2.2%, oil's now down 5.5%. So oil dropping through. It's broken that $68 mark. And let's get an update on that. Here's our FX and commods. Oh, 6.2. Oh, thank goodness I got that trade on. So short oil is the way to be this morning. Now down 6%.
Should we go back to the pub?
Monday, maybe the gym. You were just talking about getting some rowing in, weren't you?
Because of the week I've had, and I've been caring for people who are not very ill, I then decided I would come back and try and do some exercise, which can tell you that I am not that gym person. I tried jogging, almost killed me. I felt like my heart was going to explode. So now I'm trying rowing because my husband has got this water rower thing. Producer Fred saying this shit. But I have decided that whilst I'm watching Netflix, I'm only a 2-month-old Netflix baby, people. I've only just signed on to Netflix, whereas Rich has cut his plan because it's too expensive. I'm only 2 months in, so I'm trying to do that thing where I'm watching the film, but I have this water gushing as I'm trying to, get those rows in. So a water rower. If you've not seen one of them, it's a lot of wood, and it looks a bit like this. I don't know if we can show my. There we are.
Missed you, Ange.
Oh my goodness me! It looks a bit like a contraption that is for torture. And makes you feel like going to the toilet when the water is going round and round. So that's what I'm trying out.
Today's useless tip of the day.
So.
Right, let's get stuck into these sets of results. So, I'm going to read a whole heap of names at you here, but take note. In the UK on Tuesday, tomorrow, HSBC and BP numbers. In Europe, we've got Lufthansa and Novartis. Then over into the US, we've got McDonald's, Pfizer, PayPal, Visa, and Google. Google after hours, of course. That's the first big tech name of the week.
And Alphabet as well. Parent company of Google.
Well, I'd say Google is Alphabet, right? Wednesday, we've got in the UK Glaxo, Next, Standard Chartered. Then in Europe, Volkswagen, BASF, Airbus, and Ubisoft. Remember Ubisoft with those bid rumours around it as well. And then is the big tech names, Meta, Microsoft. We've got Caterpillar, which will be pre-market. And we've also got Starbucks. Remember, Starbucks already warned last week. He got all the bad news out of the way, and then he's going to go on the call and present his new strategy. So potential upside there for Starbucks if he gets that right.
Also, I'm looking to trade the big tech reports And I think that we could have another season of good news. The 5 companies reporting, the ones that you've just mentioned, 25% of total market cap of the Standard & Poor's. And in particular, the ones that I'm looking out for, NVIDIA, going to try and put, after the show, put some of those guardrails in place that Axel mentioned earlier, because I am long NVIDIA, uncomfortably long. And it has broken above my 140 level as well. I'm looking for another break, perhaps today or tomorrow. But those results, doesn't matter, people, who you're talking to. Doesn't matter which analyst or which kind of brokerage. The consensus is there's a real sort of expectation that we are going to see positive results again. And the other one,
NVIDIA don't report though.
That's further ahead.
So it's Microsoft. If Meta talk about buying, of course, the product of NVIDIA, that might move that one. And then on Thursday we've got Apple. So Thursday is Apple results, along with in the morning Shell, Smith & Nephew in the UK. In Europe, we got Total, BNP Paribas, Carlsberg, Stellantis, InBev, SocGen.
Loads.
And then, we've got Intel and Merck in the States as well.
Now, watch out for all these names that have a link to AI, because that will also boost NVIDIA's stock, right, ahead of the earnings.
Yeah, not that it could potentially be in the price already.
But Microsoft is one of the ones, the big tech companies that I'm looking for potential bullish price action, because they are seen as one of the front runners of AI products, and are likely or expected to say that the uptake in those products has been strong. Any others that we are watching out for further ahead, of course, after that jobs report? It's not this week, but we do have a Fed meeting incoming as well. And not forgetting, wow, it's such a busy time, Rich. We've got budget as well as that election, November 5th.
And I'm going to go against Axel here. I think Rachel Reeves will pull it out of the bag this week. I think Wednesday is going to be a superb advert for Make Britain Strong Again. So we're going to get a budget that there's none of the trust worries. It's going to be well presented. It's going to be well funded, and GBP to go higher this week.
Just so our viewers know, there's absolute silence in the gallery as he said that. Crickets.
MAGBA.
MAGBA? What's MAGBA?
So making Great Britain. No.
What's the
work,
bar?
MAGA. Yeah, we need another vowel.
We need another vowel, people. Right.
So that's Wednesday. And then Thursday, that's followed up with the macro. You've got ADP on Wednesday. Thursday, you've got PCE. So then you get your Fed's preferred measure of inflation. You get initial jobless claims. And then the big macro Friday is non-farm payrolls, unemployment number, wage growth. And then at 3 p.m., ISM manufacturing as well. Huge.
For those of you trading Apple, look out for any mention of iPhone 16 deliveries. Have you got an iPhone 16?
No, I've got the 15, but there's been brokers fighting with each other, saying sales aren't going well, and the suppliers are being told to cut their production levels. So there's been a real back and forward of they're going well, they're not going well, they're going well, they're not going well.
If they say anything at all about not going well, deliveries light, demand light, anything like that whatsoever, it's going to hurt Apple's share price.
Is it at all-time highs? 233? So 233 this morning. This is just getting us a quick check of our all sessions as well. There it is down at the bottom there, up 64 basis points this morning. But where does it sit on that daily chart? Not quite all-time highs.
3295 is what I'm getting.
236 is where the all-time high is. Once back on Monday the 15th, and then that was of July. And now we've got, yeah.
The price action at the moment, or above all three moving averages, and what will be key, I think, anyway, is the, this iPhone 16 business, because that was seen as the next, revenue generator, cash cow for Apple as it tries to finance its, all the other products, right? So.
And if they cut back on the mask.
Yeah, have you seen the adverts recently? The prices are coming down.
Yeah, but there's serious questions as to whether they even bother making another reiteration.
Yeah. Why can't we have like other things? I mean, forget the glasses. Why can't we have that function that they have in some ships already, where you shake your phone and that means that you get a martini brought to you? Yeah, that exists.
Have you been enjoying the gin this week?
I have. I'm still enjoying the Hoxtons. I've also given Luke a heads up because I had no idea that Hoxtons even make a gin, but it is exceptionally nice with tonic water. And I thought it wouldn't unseat my number one, but it kind of almost does. And my number one at the
risk
is the Roku, the Japanese one. So, yeah.
I'm not a gin drinker, so I don't know where to place those.
Well, we need to fix this.
Yeah.
Also, for those of you out there that bottle slow gin like myself, I'm a bit biased. So I go for bottles that have an edge so that I can turn my slow gin.
Nice.
Frank Cabernet has never seen a slow in his life.
I didn't even know what a slow was.
Really?
No.
They have slows.
SLOE, isn't
it? Yes.
Yeah.
Right. We'll have to fix that.
Right. I'm going short another £5 a point of gold because I believe that this is enough of a change today.
I believe
fundamentally to push that lower. Remembering that oil down now 6% is deflationary. If the Middle East tensions have that successful de-escalation, it's also a reduction in geopolitical tension. Therefore, that is two negative catalysts for gold. Gold at all-time highs. Going to show you the daily chart here. That is a long way up to completely ignore a double negative fundamental news story.
I'm also looking to add to my bearish oil position, WTI now, because can you see my thesis there? If we break down below 70, and we have with conviction, then the next level is 67.
We're almost there, aren't we?
Yeah, we're almost there.
67.10, yeah.
So I've taken off because what I'm now looking out for, I always get asked, and why are there funny lines on your chart? What are you doing? What do you see on this chart? So I like to take risk off, then I wait for it to break. So now my next level of support is 67, and if it breaks through that, then I'm looking at 65, that yellow line. People, trader friends, and once we break through 67 with conviction, is 65.
Right, now what are we going to be watching the rest of the day then? What have we got to trade into your power hour this evening?
So I am going to just check on one last thing before we go to power hour, because how is your EasyJet? I'm now obsessed by your EasyJet.
Yeah,
So
it's
5
dropped
minutes.
back. I think it's down to 520, is that right?
Yep, it's
Yeah, 521.
521. So it did try because you were long, weren't you?
I am.
Yeah,
I am.
you are long. So can you see it did try to break above that 5.2?
It didn't like it, did it?
It didn't like it. It didn't like it. And then we're now seeing a loss in momentum, and that to me tells me that it could start to now go down.
Shall I keep it until tomorrow and we'll see?
Yeah, Why not? Let's live life dangerously. And one for Duke of H, who has helpfully messaged us on our YouTube comment side, which is on my left-hand side if I'm pointing the right way. Are we pointing the right way, people? On that side, is that yes, you can trade Berkshire Hathaway. Let me show you. You can trade Berkshire Hathaway all sessions, and it's the B that you can trade. Here we are, all sessions. There you are, and that's to me, from a technician's point of view, a very good uptrend, healthy uptrend from 16th of September, and also all the way back from around October 2022. But the good thing is it is all sessions, and actually what's even better is that you can trade it earlier this week if Duke of H is in London. And also the other thing to consider is that this earnings season, the Berkshire Hathaway reports after Friday's close. Berkshire's market cap very nearly $1 trillion. We also have Eli Lilly, one that I like to trade because I like pharmaceutical stocks. And don't forget, not only do we have that monster jobs number, plus GDP, plus inflation, we also have, once you've just decided you're ready for the weekend, on Friday, we've got the oil majors out of the US. So we've got Chevron, Exxon Mobil as well.
Fantastic. I've been Rich McDonald. This has been the wonderful Angeline Ong. She's back in force. Thank goodness my voice will survive this week. Join us tomorrow, and yeah, we're going to have a pretty interesting. I'm going to keep it secret.
Ooh.
We got a secret surprise for you tomorrow on the show. Have a great day. Thanks for joining us.
Oh, yeah, it is Thursday, October 24th, just a little bit after 5 p.m. Central. My name is Victor Jones, and this is Tasty Live's evening show, a little podcast called The Price of Truth, where we explore the incentives that govern our world. I probably owe you an explanation. As you guys know, I've been moving, and I am left with almost nothing on this end. No lights, no desks, no chairs. And so I kind of I logged in on these guys, and I looked absolutely horrible, and they were awesome in helping to at least make this look presentable. And so my sincere apologies that I'm late. It is no one else's fault but myself. I even had to throw on this terrible, ugly New York Yankees fitted, but I appreciate all of your patience. Yeah, I appreciate all your patience. It's been a wild week. I appreciate it. That said, let's get going, everybody. Shout out to everybody watching on tastylive.com, and those of you watching on Tasty Trade desktop and mobile applications, head on over to Google YouTubes if you want to be part of this conversation. And our brilliant producers have already put up your comments and your screen names on the screen. So if you want to be part of that, and get your spotlight. Come on. Because that's what this show is about. We all know that this is not really about me or my ideas. It's basically a community that comes together at the end of the trading day to exchange ideas. Steel sharpens steel. That's sort of the idea. So if you want to be part of that conversation, make sure your voice is heard. Subscribe to the channel, the Tasty Live channel, and get squawking away in that chat as you guys are. Speaking of the people, we should say what's up to the people. What's up, Humbug, Lone, Osborne, Vibe Server, Grumpy Mike, Cactus Leo, Tasty Live. I appreciate all you guys. Thanks again for your patience. Soul Train Mike. So many of you guys, giving me the business as you should. Somebody, there was a comment in here. Hold on, where was there was something like if I showed up to work as much I can't remember it. There was a great line in here. One of you guys gave me the business in one of your lines. If I find it, I'll call it out. Oh, here it is. Bah humbug. If I showed up to work as timely as Vic, I would have to move to Singapore too. All right, you guys got me. We're even. Let's get going. A bit of a mixed day in general. Risk was positive here today. That's not news, right? But the Nasdaq up 4/5%. The Dow down 1/3% today. The Russell was up 1/4%, and the SPOOs were up about 1/5%. Really lackluster day, but I suppose the market will take it after. I don't want to say getting pummeled. It wasn't that ugly of a day yesterday. Nasdaq down 1.5%. We've seen that before. We're going to see it again. And the odds are, when you're at an 18 VIX, right? What's a 16 VIX? A 1% move. So at an 18, 19 VIX, a 1.5% move, or a 1% move in the S&P and 1.5% move in the Nasdaq, that should be on everybody's radar. That's well within the expected move. And then we got a bit of an uplift yesterday in Tesla. And the question was that I posed to Ilya, would that be enough to sort of change the momentum of the market? When you get an outlier move in one of the Mag 7, I know the market Tesla doesn't carry the market in the way that Nvidia does. But the point is, it's one of the Mag 7. It's a gigantic name by market cap, and it had an outside move yesterday. That's good enough for something. Now, couple that with the idea that we got I don't want to say a decent day in bonds, because it wasn't like a massive move to the upside. But the point is, we didn't have as much selling in the 10-year and the 30-year here today. And I could make an argument that that's a big reason why risk sort of has to reprice a little bit. We touched 4.25%, so 4.25% yesterday in the 10-year. And at some point, I think stocks had to notice. And today, you didn't continue to see that downside pressure in bond price, upside pressure in bond yield. And for that reason, should it surprise any of us that the Nasdaq outperforms under those conditions? Probably not. I don't really know how to call the Dow. I'm guessing this is probably just me not paying attention to the Dow names. What would have been the outlier in the Dow that hammered them here today? Because it's a price weighted index. So usually, if you just get one of the big price names down significantly, that's enough to. Is it Boeing? What was one of the big Dow stocks that must have been down today? It's always idiosyncratic. That's why it's one of the worst indices, to be quite honest. But the point is pressure on the Dow, and then 25 basis points or so in the S&P 500. How did you guys fare? How did you fare? I think I was in line with the S&P 500 broadly. I think Tesla kind of saved me today. Tesla saved me today for sure. I had some dumb 240, 250 call spread that I had put on before the robotaxi event, and it had basically gone to nothing, next to nothing. Sometimes it's better to be lucky than good. I'm curious, how did you guys perform? These are always interesting days when you get a real weird movement in the S&P 500. It sort of lets you know how you're positioned relative to market positioning. I'm curious, who had an outlier move both to the up and the downside, if you're brave enough to say it? Who's brave enough to be honest out there? That's what I want to know. By the way, voted early today. How many of you voted early? Did you already get your votes in? I don't know. Part of me is kind of like, Dylan Radigan said this in the Truth or Skepticism the other day with Tom Sosnoff, which I thought was a good one. If you haven't watched that episode, go check it out. But I have so much reverence and respect for Dylan Radigan, because I've been watching him since I was, when I first started in the business, I would be on the phone, doing my thing, and right behind me and my desk, there was this TV, and on the TV every day they played Fast Money. So I literally saw that show launch, and I saw him carry that show. I've read his book, Greedy Bastards. And, when he came to Tasty, I've been a closet Tasty fan since they launched. Don't tell Tom. but I've been watching it every day, just like some of you guys. So my point is, I have a lot of respect and reverence for him, not just in the market side, but what he's done in the political side. And when he said on the show the other day that like it's all a game, it's all just a giant ruse to make you believe we have some sense of power. Democracy, we don't necessarily have that power in the democracy anymore. Oh, it was like I can think that sometimes, but I'm crazy. I discount my thoughts. But when a guy that you revere, and that person has a ton of not only inside information, but he's spent a lot of time studying it. When he says it, I was like, man, that's something. Let the air out of the tires. You know what I mean? It'd be like LeBron James saying, we script, we know who's going to win the NBA championship at the beginning of the year. It would take everything out. It would take all the enjoyment out of the NBA. You know what I mean? Anyways, I don't know why I did that aside, but my point is I voted early, and I'm hoping at some level that means something. So shout out to all of you who are participating in the political process and executing on your civic duties for whatever it is worth. What kind of aside was that? Caterpillar. Thank you, Noah. I knew it was one of them. Let's see. Loan. Of course it is. Dylan is fully aware of the truth. I know, man. But sometimes, you remember that scene in The Matrix where he's eating the steak and he goes, I know this isn't steak. I know my tongue is sending a signal. My taste buds are sending a signal to my brain and blah, blah, blah. But sometimes the delusion is better than reality, maybe. Or maybe it's like the reality of the situation is almost too much. It's too heavy to try to sync your perception with reality. So you'd rather live in your deluded perception. Anyways, somehow this is market related. I voted early. Yeah. So Caterpillar, I guess, is the weight on the Dow. That's how this thing works, man. And as we could have guessed, it's up $1.20. I didn't do that much damage. As we guessed yesterday, what did we say? If anyone watched that back and forth with Chris and myself on Twitter, it was down to 282. We were joking. Again, this stock can go. McDonald's can go down, but it's not going to go down because of E. coli. It's just like that's not how fast food stocks work. You know what I mean? It's just not. I mean, in the short term, sure, but like, who owns McDonald's? Like, who owns McDonald's as a short-term trade? Who owns McDonald's going like, I think we're going from 320 to 327? Like, is anyone doing that? I don't think so. I'm willing to bet a lot of people holding McDonald's are long-term investors. And I'm not necessarily saying it's attractively priced here. I don't really know. All I know is, like, when you've been doing this long enough, you start to pick out little patterns, some of which are you don't want to think about. I don't want, whenever there's a natural disaster, the thing that comes into my head is Home Depot is going to outperform Lowe's in the short term. And once the natural disaster hits, both of them are going to fade. By the way, that's exactly what happened. I tried to tell you guys, you got a little bit of a fade in Home Depot. You had to wait for it. I don't like thinking every time we get a big mass shooting or something like this, that the normal reaction for gun stocks is about a 2% move over the next day or so, positive. I don't like thinking that stuff, but that's what happens. There's this knee-jerk reaction in the marketplace of potential threat of regulation, and then gun owners, they run out, they buy additional ammunition, so the market price is a +2 or 3% move in some of those guns. I don't like thinking this way, in the same way that I don't like seeing that some people got sick, and then I look at McDonald's and I go, they went from 320 to 282, and my first thought is that's going to go back to 300. I don't want to be that guy. I want to be like, oh, how many people got? I want to be I want to have empathy for the people and understand what happened. How do we prevent it again? But somehow the market's turned me into this weird, cold machine. I don't know if it's good or bad. But anyway, somehow again, like, and I talked about this earlier with Tom. You can go back, you can look at Chipotle. Like, you couldn't have there couldn't be a better case study for why you don't panic sell E. coli. You don't panic sell some quarter pounders with bad onions. It's just, especially McDonald's. I mean, come on. I think somebody came for me in the comments. With all due respect, everyone has their point of view, but one of the reasons Warren Buffett invests so heavily in Coke is because he knows that Coke has no taste memory. And there's even a video of him explaining exactly why he loves and Coke as an investment. If you don't believe me, go on YouTube. And he's got this 3 to 5 minute speech where he explains exactly how Coke was scientifically engineered to have no taste memory, and that when you drink a root beer on your first drink, you have a certain chemical reaction, but by the end of a root beer, you don't want another sip of a root beer. Same thing with an orange soda, a grape soda, you name it. But the last sip of Coke, you have the same reaction as you do the first sip of Coke. Same thing with Diet Coke, which is why people can rip through 6 of those things in a row and still be thirsty, still want another one. And, that's the type of weird science you're dealing with here. So you can tell all of America tomorrow that there's E. coli in the quarter pounders in Nebraska and Colorado. And you know what they're going to say? 48, and the people in the 48 out of the other 50 states will go, oh, I don't live in Nebraska or Colorado. I'm probably okay. And then the people in Nebraska and Colorado will say, it's probably fine by now. Probably not my McDonald's. Anyways, that's an aside. I think a lot of the vol has come out here. We had spiked. IV rank was really, really high yesterday. It's still relatively high at 70. But that's only because McDonald's implied volatility is really low. So even though IV rank says it's 70, the individual IV is still only 26%, which means you're not going to get very far out if you're selling vol McDonald's. So the trade's kind of over here from a vol standpoint. Price standpoint, you still got a discount. And who knows, if we continue to see slowing growth. I don't know, it's still probably an attractive discount because people trade down. People trade down in slowing growth. McDonald's might be all right. All right, I'll get off my McDonald's kick. I'm sorry. I don't know why I went to that weird dark space. Coke from Mickey D's do be hidden. That's a whole different story, Victoria. They have this whole specific deal of how the Coke gets to McDonald's, the temperature they keep it. I'm telling you, they figured this stuff out. That's why McDonald's Coke is different. It definitely is. I'm going to say in different ingredients, but they've got this whole temperature thing that they do at McDonald's with Coke. That's true, Victor. The guy in South Carolina is reading the E. coli story while he's waiting for the 2 quarter pounders he ordered. It is funny, but it would be even funnier if it weren't true. If it weren't so true. All right, give me just a second, everybody. Let's see here. All right, let's talk bonds for a little bit. We'll talk bonds in 10-year. I won't do, we've been talking about this a lot the last couple of weeks, so I'm not going to talk about it as much today. There wasn't a ton of movement So bonds at 118, a little bit of a lift here. I would love, see, my previous target was I hoped we would get a rally back up to 124 to get some short deltas on. And now that feels so far away, right? Bonds at 118. What would it take us to get to 124? So I guess we have a decision to make, which is if you still want to be short, or if I still want to be short the long end of the curve, at what level becomes interesting to try to get the short deltas on. So I'm not really sure what that number is going to be. It's probably not 124 anymore. But I don't know, 120, 121 kind of seems like a sucker's bet as well. I'm not really sure what that number is going to be. Somewhere between 121 and 124, most likely. And in bonds, same thing. We were hoping for a rally to get us back to 113 and a half. But that was sort of when we weren't necessarily expecting an additional, 1.5 point down move. So now we're at 111 and change. And again, the question becomes, where do we want to get short deltas on? And I'm pretty sure we're pretty far away. I don't know, 112, 113, something in that range. So I think at this level, me personally, I don't have a ton of stuff on. I still have that upside. So basically, I told you guys I had that upside call spread in ZN. So long a call, short a call above it to help pay. That short call went to like almost nothing. I think it was the 113, 116. So I bought back in the 116. So now I'm just long the 113s. So I actually have some pretty decent long deltas, but out of the money, cheap, dumb stuff. And if we get lucky on a rally, then great. Otherwise, it's just an area that I don't love the risk to reward of being short. And I don't really want to get caught long, which is why I'm in this cheap upside play. But maybe, 2 points in the 10-year, 4 points in the 30-year. And now we're probably in a decent position to start taking some short deltas or selling some upside call spread, something. But we're sort of, in my personal opinion, we're in a bit of this no man's land. And I wouldn't, anyone that tells me I'm long bonds or I'm long the 10-year, I can't get mad at that. I definitely can't get mad at that. I mean, this is a trade, right? We're all traders. Even though I think we might work our way towards 5%, doesn't mean you go there in a straight line. And because we're trading these bond and notes futures contract, they got some hefty notional value. Don't let them fool you that we only move 1 point or 16 ticks in a day. The reason these are interesting trades is because these are really big notional value. There's a decent notional value behind each one of the contracts that we put on. So you want to get it right to the extent that we can. And just a bit of a no man's land. You guys tell me, what are you guys doing in either ZN or ZB? The one thing that I kind of would feel comfortable just putting on and leaving, if I could keep it on really small and just continue to add to it. Some part of me thinks that we're not just going to steepen up to 100 basis points. Some parts of me thinks we're going to wrestle around between 10 and 30 basis points between the 2 and the 10-year. We're going to stay there for a while. And so if I want to put on the 210 spread, which I do, I just don't think we're just going to open up in a few months. I think we work towards opening up, but we can be in this sort of like back and forth area where the yield curve is telling you have a positive yield curve, but you don't have this just this explosive growth environment yet. I think there's a lot of questions that still need to be answered, both in the domestic economy as well as in the global economy. And until those questions are answered, I don't know that the bond market opens up to 100 basis points between the 2 and the 10. But I still think that's probably where we're headed, right? And another inversion, to me, that would seem silly. So I think that's where we're headed. I like the steepener. I probably don't like it here. What are we at? 20 basis points and change. I don't love it here, but Give me just a second here. I'm trying to manage a couple things all at once. Thank you very much. Sorry, guys. My sincere apologies. I'm trying to manage a couple things at once. So I like the idea of us steepening out over time, but I do think it's going to take time. So I would caution anybody that's putting on that steepener. In my personal opinion, you might want to have a Snickers because we might not go anywhere for a while inside of this range. Though I do like it over the long period of time. You tell me, what are you guys doing with bonds in the long end of the curve? Let's see. What are you guys saying? Vince K, never talk my trades. I've had hella losers, but great day today. Was in Tesla. Made good paper on the leap. Nicely done. Shout out to Vince K. Everybody show him some love. You know, it's like going to the golf course. I'm a horrible golfer. You know what I mean? I'm like Happy Gilmore, that type of golfer. I'll throw my golf club. The type of person you probably I'm a public course kind of guy. You don't have a guy like me in a private course. But I think there's always that one, 18-foot chip, and you're like, I play horrible for 9 or 18 holes, terrible. But like I stick an 18-foot chip, and I'm like, all right, I'm gonna come back. Sometimes the market feels like that. So shout out to Vince K. Good on you for having a nice day, my friend. Loan. The E. coli brings out the extra zest in those burgers. Chris Week saying bonds are uber cheap. Yeah. I kind of think people are going to take some shots here. I just don't think we move in a straight line. Do you know why bonds up so much? Michael Anthony says. Why do you think they're up so much? I wouldn't say so much. I mean, it was a decent day. We rallied. But I would say in the big scheme of things, like just under a point move or around a point move, that's not a huge day. That's sort of a normal move. And I would also say that, again, nothing moves in a straight line. Let's see what we hear. Bonds are uber cheap. We already read that one. I have half my portfolio in bond futures now. Holy God. Amal? Is that how you pronounce it? That's something we like to call concentration risk, my friend. Not something I would do, but I'm swinging for singles. I've seen a lot of people take a lot of risk. Sometimes it pays off, and sometimes they wonder why. They wish they could make that decision over again. And so I've had to get used to watching people to my right put it all on black and it hits, and I'm got to be happy for them and not necessarily be like, oh, why can't that be me? Because then that gets me to go outside of my risk parameters, and I never want to do that. I want to stay inside of what I know I can make solid decisions. I want to stay inside that risk frame. And I see people on the other end, they take that risk and they blow up. And I'm like, well, I don't want to be that person. So I'm cool with my risk parameters. I'm wishing the best to you, my friend, swinging for that single or that home run. But I'm gonna keep bunting and trying to get on base. Herbert Field says short. Jay says looking at buying TLT. D chat saying short ZB puts. Yeah, so some long deltas out there. I don't blame you, man. I don't blame you. Prince Caspian, that's what we call gambling. JJ saying, or Amal will have a Lambo. That's what I'm saying. I again, when it comes, I've been doing this long enough that I never criticize somebody else for what they do with their money. It's their money. It's their decision. As long they're a big boy or big girl, they know the risk they're taking, then all I can do is say good luck, and I'm sincerely hoping it works out. That's all I do. I don't criticize anybody. Let's keep going here. All right, let's talk Bitcoin for a second. Victor, why do you keep calling Bitcoin? Why do you keep talking about Bitcoin, Victor? I am fascinated with this move, and you can see this little channel. You know, I drew on my chart with crayons. Don't take any of this stuff that I put on here. Take it all with a grain of salt, because I'm no technician. You know what I mean? I read John Murphy's book and Steve Neeson's book on Japanese candlestick charting, and I don't know, you name it, I've read it. But I'm no technician. So just because there's fancy, funny lines on this chart, just assume I wrote it in crayon with a colored pencil. You know, those big ones for kids. Like, don't take any of my lines on these charts with precision. But the point is, yesterday, because at 61, I think we took some upside risk in Bitcoin. We were kind of waiting for the lower end of the channel at 57.5 to start adding, with another bullet ready at 55, another bullet ready at 52.5, and if it broke outside, we'd have to stop it there. But I just got a little bit of FOMO at 61,000. Why did I get FOMO? It was because of what the hell was happening in MicroStrategy. MicroStrategy and coin were moving, but Bitcoin was like still staying range bound. To me, it just didn't make sense. So I took a little bit of a bet, a small one, and we talked about it here, and we've rallied outside of this channel. So then the next test is, do we test this channel, right? Do we test it as support? And yesterday I was sweating bullets. But luckily we did. We literally tested this little dumb line that I drew on this chart with a crayon. Sometimes I'm telling you, it's better to be lucky than good. And so we're still in it. We're still in it, baby. And part of me is thinking, I don't know where this thing goes. But it definitely seems like we went nowhere for like 5 months, and now all these crypto stocks are mooning. China's kind of looking like they want to put liquidity in the market. The ECB's looking like they want to cut a half point, or at least the market's telling them you got to cut a half point. The Federal Reserve was playing a game of chicken. They blinked, cut half a point. Arthur Burns. That's what there's a bunch of stuff I say to these guys that you guys never see. But as soon as we made that 50 basis point cut, I sent a big picture to Ilya and Chris, and it was just that Arthur Burns picture. I was like, what a mistake. What a mistake. But I don't know anything. But anyways, my point is, I don't know. I kind of like this little setup for Bitcoin. We'll see. Who knows? Maybe I eat it and this thing cuts to 50,000. And there's a big part of me that the logical side of me goes, prices don't make sense here. To me personally, of the data I see, the environment that we're in, the consumption patterns, and just like when I talk to regular people, I can't make heads or tails of what I'm seeing on the screen. So and then the valuations, the concentration risk of the valuations, there's so much that I think all of us see it. But just because all of us see it does not mean we need to normalize today. What's that saying? The market can stay irrational longer than you can stay solvent. and I some sick part of me goes, even though you all see it, you all see that we're overvalued. You're all kind of cautious here at 6,000. You all don't really want to put more money into Bitcoin at 69. I go, that's exactly why we should melt up in every asset until all of you throw in the towel, and you feel like, oh no, I'm missing out. Not that you're missing out on money. It's that you all have this like general idea that the equity markets are capital, and as equity markets go up, that is more money supply. in a way that's a way of measuring inflation. And if we start moving higher and you're not a part of it, people go chase. And that's how you get this dumb melt up. And some part of me would love to see a melt up as like that. You know, they say they don't ring a bell at the top, but if we could get this set up into a melt up, that's your bell. I don't know. I just kind of blacked out just there. My apologies. Grumpy Mike, crayons are delicious. Chris Week saying, is this rule still true? T-bills rise over 6 days, S&P falls by market. Oh, I don't know. I've never heard that rule. I will look it up after this. But sometimes I've only spent a lot of time. Most of the time that I spend in front of a screen is by myself. You know what I mean? Us generation of traders, us online screen traders, you spend a lot of time by yourself versus a previous generation who was doing it in a crowd. So the previous generation has all these great sayings. I try to learn what I can from Tony and from Tom and from JJ and from Frankie and all the guys that have been on the floor before, because they just have so much of this wisdom floating around in their heads. They don't even realize how valuable it is to people like us. You know, they'll just say some stuff on a throwaway, and you're like, wait, what? T-bills do what in 6 days? And then it's like this hard and fast rule that they just throw out. So I don't know, Chris. But maybe it's a good email for like Tom, Tony, or Frankie or something like that. JJ saying MSTR is the play with Bitcoin, but I'm waiting to long. It's tough. I like what he's doing. I like what Michael Saylor's doing, sort of angling towards being the first. What did he say he wanted to do? Be the first Bitcoin bank, basically. And he's using any premium in the equity to buy more Bitcoin, any discounts to buy more, to convert back to equity. Like, it's brilliant what he's doing. I'm sure there's risk in the strategy, and I haven't looked at it, but I knew maybe about a year ago I had been reading kind of where those break evens were, where he could get hurt. But it's brilliant in the short term. You know, there are the naysayers who look at Michael Saylor as, because he got burned back in 2000 in the tech bubble, sort of that he got overly jubilant about risk during the tech bubble and got burned. But I mean, I listen to that guy and I feel it's super hard to poke holes in what I hear him saying. Am I crazy? You guys tell me. When you guys listen to him, do you guys hear a bunch of just nonsense, or do you listen to him and you go, I hear no lies? Because I don't hear many. All right, let's do a couple more. How many of you, here's the thing. How many of you sold puts the other day on Tuesday? Be honest. How many of you sold puts the other day when Chris and I talked about it? And it was sort of the funniest conversation because he talked himself. He gave the negative narrative, and as he's doing it, he almost talked himself into, by the end, selling puts. And I was thinking the same thing. I didn't pull the trigger because I'm a big old scaredy cat, but maybe somewhere out there, somewhere we convinced somebody to make a little bit of money, because Natty Gas is now up to 3. And went straight there after that conversation. That's the greatest irony. Lone says, I can't listen to him. Really? Can't listen to Michael Saylor? I got to be honest, Lone. That's probably a great compliment, because I don't know, you listen to me and you don't listen to that guy. I don't know how to feel. Because I listen to that dude and I'm just blown away by his knowledge of his knowledge of history, his knowledge of capital. Yeah. Vibe server of Sailor sus. God, you guys are funny, man. You guys are so funny. I kind of wish I was changing my positioning more than I was, but I'm not. I just don't see a reason to change a lot of the positioning. There's a part of me that is really worried about what's happening in the dollar, and how that manifests itself. Like, is it just going to dampen people's inflation expectations, but it's not going to crush risk? It's not going to crush, um, dollar-denominated commodities. I don't know. Some part of me just doesn't. That part of the story I don't understand yet. How we can have such a strong dollar and a lot of the dollar-denominated commodities are just doing fine, and risk is doing fine, and even that's not only domestically, but it's kind of internationally as well. International risk is not necessarily getting crushed. So there's a part of the story here I don't fully understand. Materials took a little bit of a hit today relative on the marketplace. So XLB was the underperformer, down 1.25%. As you guys know, I'm over-levered. I would say over-levered, overweight to materials, energy. Materials, energy. That's kind of where I'm hanging out. I mean, I got some tech, and then outside of that, it's China, and you guys know about all that. But the thing is, when I say all this stuff, when I say all this stuff, it's all collared. Most of my stuff, the biggest positions, I would say the top 15 positions I hold are mostly all collared. Somebody just sent me a message. What WTF, man? Ooh, look at Newmont. Well, I was telling you, this is one part of the story. It doesn't make sense. So Newmont had earnings. Newmont had earnings. So market did not like. That's why we collar. That's a brutal downside move. To me, I don't know. I didn't listen to the call yet. I didn't see their numbers. I'll go check it. And I think the next time I'll probably tweet at this. So I'll go check it tonight, and then I will post sort of my thoughts on Newmont and whether I think this is an interesting level to add new deltas. So I haven't seen enough. I can't comment on it just yet. I'm not sure who just sent me that note. I just saw the notification on top of my phone. But I'll look at it. If you want to follow me at Victor Jones, the O in Jones is 0 because I like to be difficult. So I don't have something for you offhand on whether I actually think the fact that we dropped from 58 down to 49.25, if I think that's value or not. Let me go look at what was said. But again, there's this part of this strong dollar story where gold's not moving. That part worries me a little bit with some of the materials. We'll see. But again, this is like example A of why I collar this stuff. Like big winners like this, if it's a big position in the portfolio and I've got a pretty decent winner on my hands, some people like to put stops. I don't like to put stops on my equity positions. I would rather use options, sell some of my upside, take the credit, buy some downside, and then I get a move like this, I don't get stopped out. My risk is defined. It's a synthetic vertical spread, and then I get to take my time and figure out what I want to do next. There's no panic move. There's no sort of like adrenaline spike or like making rash decisions. And for me, that works. Yeah, that works a little bit better. Okay. Michael Anthony saying, Victor, can you look at Newmont numbers now? All right, I'll try to take a quick look. Because you asked, my friend. Let's see. Q3 earnings lag estimates. Newmont, 81 cents per share. They lagged by 83 cents compared to 36 cents a year ago. It was expected that this gold and copper miner would post earnings of 53 cents per share when it actually produced earnings of 72 Oh, I think that was from the previous quarter. This is Zach's article. I hate these. Let me find something good. Dropped by more than 14% as the largest precious metals miners posted third quarter earnings and sales shy of Wall Street's target. Expectations are high for precious metals miners because of torrid runs for gold and silver in recent months, triggered by geopolitical instability. Yada yada yada. I don't know. I'm gonna have to. Usually when I do this, it's not like I can just look at some high level numbers. I'm gonna have to take my time with it. I'm gonna take my time with it, Michael Anthony, and find some actual good articles. Sometimes with these miners, not a lot of people cover them, so it's not like I'm gonna find good stuff that's just posted on CNBC or Wall Street Journal. Because if it was Tesla or Apple or Netflix, you get liquidity and news flow. But with some of these stocks, you're not going to have the liquidity and news flow, which means you got to actually do your own work and figure out what's going on. So, Michael Anthony, I would if I could, but it doesn't seem like there's great stuff for me to click on, and I don't want to keep a bunch of people waiting. So let me do this. Everybody, I appreciate your patience with me today. I sincerely apologize. We got started late. That was 100% my fault, but I appreciate you guys hanging on. So what changes in the positioning going to next week? Coming into this week, I was short NASDAQ deltas over the top of the portfolio. I covered that yesterday and didn't reestablish it today. So I got a little bit lucky. So I have a little bit more right now. I have more deltas in the positive deltas in the portfolio than I've had for a really long time, and it's not because I want these deltas. I just didn't feel like yesterday, after a 1.5% move in the Nasdaq, that I wanted to be short futures. That said, I bought some downside Nasdaq put spreads. And I still have some VIX calls like up at 30, 40, and 50. I know that seems crazy. And it probably is going to be crazy. I didn't spend a ton of money on it, but this is the type of stuff that helps me sleep at night. I collar my stocks. I buy stupid VIX calls sometimes, or downside Nasdaq puts, and then I like to scalp. I scalp around, and this stuff allows me to sleep a little bit better at night and mitigate out some of the portfolio variance. It means I underperform sometimes on great days, but on down days when everyone else is going like, "Oh no. Is this bad? How bad is this going to get?" I'm not sweating it out like everybody else. So that's my style. It's a little bit different. So the biggest question for me is whether or not to put on some short NASDAQ deltas, which I don't have. So that's the biggest change. I'm still long the miners. I'm still long China. I'm still long nuclear energy. But again, the biggest difference, and I call this out all the time, is that I'm long. I have zero cost collars around all that stuff. And so we've had massive runs in nuclear